So let's begin the MTP session. This is mock test paper P5 audit. Through MTP and RTP, we are going to solve at least top 50 important questions. Top 50 important questions. It may be MTP, MTP1 and MTP2 and RTP. These three papers will put together will contain at least 50 descriptive questions. 50. For example, MTP1, if you see, let's discuss MCQ part later first. I will start with MCQ discussion only, but introduction, I'm first talking about descriptive part. In MTP, how the paper setting will be, like what is the paper setting will be? Just a minute. So how paper setting will be done is like, you will have paper for 120 marks, right? And out of which 30 marks is for MCQ. You must score 30 out of 30 in MCQ. For which if you 100% watch the class, I will give you that assurance. If you watch the classes 100%, for sure I can assure you will get minimum 24. Just by watching keenly the classes, understanding what we are covering, context based understanding, application understanding. If you are able to understand the classes thoroughly, you will be getting 24 out of 30. Then we have descriptive part which is for 90 marks, and out of which 70 marks is what you have to attempt. How the 70 marks will be splitted into? They will be splitted into totally 5 questions. Question number 1, where you won't have any choice. Whereas remaining, there will give 5 questions, out of which you need to give 4. So 4 into 14 and 1 into 14, totally 5 into 14, 70 marks is the weightage. How each and every question will have the composition, how each and every question will compose, like what is the composition? Each question will be for 14 marks, which will have sub questions. How sub questions will be there? 4 sub questions will be there. 4 sub questions will be there. 2 sub questions will be 4 marks. 2 sub questions will be 3 marks. 4 plus 4, 8, 3 plus 3. You're getting it? Totally 14 marks. This is how 4 questions will be there. Sometimes 3 only will be there. 5, 5, 4. Sometimes only 3 questions will be there, which is 5, 5 and 4. This is how the composition of the question paper will be like. So every question will be minimum 3 marks, maximum 5 marks. That's the weightage. For a question descriptive which is 4 marks, it is enough to write 4 to 6 relevant points. Correct points, complete points, relevant points you have to write. And of course, if it's a case-based question, descriptive itself, where they have given a practical scenario, you have to briefly discuss about the provision, briefly, and analysis and conclusion you must give. Don't worry, we are going to learn all that in this MTP and RTP. We are going to discuss on how to present it. Now this MTP, they'll give you this question paper, they'll give you, answer also they'll give you. Answers, no, we will read and understand how to present that answer in our exam. You're getting it? How to present that answer in our exam. That presentation part also we will understand in this MTP session. So let's begin this particular objective based questions, MCQ objective based questions. So MTP1. So first, like again, MTP, no, the MCQs, right? We will have 15 MCQs, which 2 marks each. Totally 15 MCQs will be there. 5 MCQs will be independent cases. Like they'll give you a small case study, direct question they'll ask. 10 questions will be based on 2 big case studies. 2 very big case studies they'll give. One practical scenario they'll define. Very big practical scenario they'll define. And on that, some 2 to 3 questions they will be asking. 2 marks each. You're getting it? 5 questions will be asked. 2 marks each. On every case study, general they'll ask 5 questions. Total 15 questions will be there. Whether it is based on case-based scenario or whether it's an independent case, whatever it is. So let's read that. First question itself is bank audit question. We'll discuss and we'll explain you briefly the provision also. Everyone, are you clear with the voice, everything? uh, you know, reading reading the question itself is very important. Your reading skill is very important. You have to read slowly, carefully, by processing it. Like how I observe in many students is they read once casually, again when they see the question they forget what they read, and again they come back and read. There the time gets wasted. But since it's an audit subject, 3 hours is generally more than sufficient. Generally for audit subject, 3 hours is more than sufficient. So though you do sometimes twice the reading, you need not worry. In audit paper, time is not sufficient. That issue is very rare. And I always tell students to always target 90 marks of the paper only, not 120. You're having 120 marks paper, where I always tell 3/4 strategy. Like 1 or 2 chapters you can absolutely ignore. Big chapters, 1 or 2 big chapters you can absolutely ignore. Remaining chapters, be 100% sure. So first question, first case scenario. Viswacharya and Associates. It's a CA firm based in Orissa. He is appointed as an auditor of CBF Bank for the financial year 23-24. During the course of audit, it came to notice that the bank has sanctioned an overdraft facility of 75 lakhs to Times Limited. So there is a company, Times Limited, the bank has sanctioned. We are auditor of the bank. However, as per the stock statement furnished, for the last quarter, the drawing power was calculated to be 50 lakh. The drawing power calculated to be 50 lakh. Whereas overdraft facility of 75 lakh is sanctioned, right? This is actually called a sanctioned limit. This is called as what? Sanctioned limit. How much the company can withdraw? 50 lakhs, and that's called drawing power. You will understand these points in the bank audit chapter. It was observed that few advances were guaranteed by, like they have given loans, right? They have given loans, all that. And when we are verifying loans, the auditor, when he's verifying loans, he came across some loans and advances. They were guaranteed by whom? Central government, as a part of Make in India initiative. However, the guarantee was not invoked. Invoked means what? Guarantee invoke means, suppose if I give guarantee on behalf of another friend to third party, if the friend does not repay, third party invoke the guarantee on me, means, hey, he didn't repay, you pay me now. That's called invoking. What is it called as? Guarantee being invoked. But right now, central government guaranteed advance is there, right? Guarantee is not yet invoked, and the advances were overdue by 75 days. One more thing is also there. Guarantee was not invoked means there is another meaning also. Guarantee is not cancelled. Guarantee is still active. Getting it? That is also another meaning, another context. So, and advances were overdue by how many days? 75 days. These advances were classified as standard asset and were regarded as NPA for income recognition purpose. So how the bank classified these advances? They classified these advances as standard assets. Generally for NPA norm, how many days it has to cross? There is a days called 90. Since it is less than 90 days, they are still classifying it as a standard asset. What if here the answer is 95 days? What if here the answer is 95 days? Should we classify it as a standard asset or NPA? No. Central government guaranteed advances. What are they? Central government guaranteed advances. Even if the borrower does not pay on time, even if there is a default, even if it is for more than 90 days, we still consider it as a standard asset, because whether borrower pays or not doesn't matter. Government will pay me back. Central government guarantee is there. This is a special NPA norm from RBI. This is a special NPA norm from RBI. So normal NPA norm is what? In case of term loans, in case of bills purchased and discount, NPA classification is based upon 90 days overdue logic. Whereas for cash credit and overdue, an account will be treated as NPA. In case of a cash credit or OD will be treated as NPA if it is out of order. If it is out of order. These are the three cases. Term loans, 90 days overdue concept. Bills purchased and discounted, 90 days concept. Even for OD and cash credit, out of order concept. There are three criteria for asset classification into NPA. For banks, loan given is an asset, right? Now, when this asset becomes a non-performing, if on this term loan, interest or principal or both, whatever it is, installment. If it is overdue for more than 90 days, we classify it as NPA. If it is a bills purchased and discounted, if it is overdue for more than 90 days, it's NPA. For bills purchased and discounted, no, from which date we calculate due date, overdue, maturity date. From maturity date, the bank has to collect. From maturity days, 90 days over. Then if it is after 90 days, we classify that bills purchased and discounted loan amount as NPA. For cash credit and overdraft, we classify it as NPA if it is out of order. If it is out of order. What is out of order? When a cash credit and OD will be treated as out of order, very simple. Now tell me, bank will sanction OD facility, right? For example, in this case, bank has a sanctioned how much? 75 lakhs. And customer was given power to withdraw how much? 50 lakhs. That 50 lakhs is treated as what? Drawing power. Sanctioned limit is based upon customer repayment capacity. But how much ever customer is ready to repay, we will not give that much loan. We give loan based upon customer security provided. How much? Based on security provided by the customer. Just a minute. So drawing power is based upon the value of the security. You know, banker will not give just like that loan. Okay, you have very good income, you are ready to repay, but I want security also. Only if I have security, I'll repay you. Tomorrow, what if I gave you loan just based upon your repayment capacity, but what if you abscond? Yes or no? So bank wants security also. So banker will generally is ready to give this much loan based on your income. That is sanction limit. How much is ready to give? But how much will actually allow you to draw? Depending upon the value of security you gave. Suppose I gave you 75 lakhs per month, 75 lakhs, that much amount sanction I gave. But how much you can withdraw? Banker, the borrower, no, he gave me current assets as security. He gave me what? Current assets as a security. That's called hypothecation. That's called what? Hypothecation. Through hypothecation process, current assets were hypothecated to our bank. The value of these assets are 75 lakhs only. How much banker will give power to withdraw? Not entire 75, because I want to keep some margin, because 75 lakhs tomorrow exactly may come or may not come. So 30%, 40% margin than banker will give. So banker will only give you 50 lakhs worth of drawing power. So drawing power will not be equal to value of the security. Drawing power will be equal to value of the security minus margin. This is the general NPA norm. Now, you know, out of order we are discussing, right? First case is what, you know, when a cash credit, when a overdraft will be treated as out of order, if the outstanding balance in customer account, if the outstanding balance in customer account is more than drawing power, is more than sanctioned limit. Generally, it should not happen. It is impossible. But if at all, by any chance, a customer account is having outstanding balance that is more than the permitted amount to withdraw, more than the sanction limit, right away it's an NPA. Right away we classify that cash creditor overdraft as out of order, and we straight away classify it as what? NPA. Or the customer outstanding balance is less than sanctioned limit, or less than drawing power, less than, within that, but 90 days continuously no repayment. Customer withdrawn money, they are debiting interest every month, continuously 90 days in that ledger account of the customer, no credit. How many days? 90 days no credit. Then also I will call it as out of order. Or I debited 1 lakh interest from the customer. Customer also gave credits, some amounts he repaid, but the amount he repaid is less than the amount I have to recover. Credits are there, but they are not sufficient to recover the debits which the bank is making to the customer account. Means customer is not paying sufficient amount. He is not repaying back sufficient amount of interest and all. He is not repaying 90 days sufficiently. He is not repaying. Then also what do we classify it as? Out of order. And when a cash credit and overdraft is treated as out of order, it is treated as NPA. When a cash credit and overdraft. When a cash credit and overdraft be treated as out of order, point number 1, if outstanding balance in customer account is more than sanction limit and drawing power. Point number 2, if there are no credits continuously for 90 days, it is treated as NPA. Third one, credits were there but not enough to cover the debits made by the bank. Then also it is treated as out of order. That's it. So now this is normal NPA norm. This is normal NPA norm. There are special NPA norms. If at all advances were guaranteed by central government, 90 days logic and all, we don't apply. If guarantee is there from central government and it is not revoked or not invoked, getting the point, we will classify that guaranteed advance as a standard asset, even though the default is more than 90 days or less than 90 days, doesn't matter. Well, now tell me, when we gave a loan, no banker, no, how banker will recognize interest on the loan? Cash basis, accrual basis? Accrual by default, yes or no? But have you heard interest on non-performing asset shall not be recognized on accrual basis? Interest on non-performing assets shall not be recognized on accrual basis, but can only be recognized based on cash. Now here, central government guaranteed loan is there, right? It is treated as standard asset even though there is a default. What about interest? Customer is already defaulted. By the way, remember, interest and all we are not able to collect, but we are recognizing interest on accrual basis. Is it permitted? No. For original principle, no need to treat it as NPA. It's okay. But interest point of view, treat it as NPA. Interest point of view, treat it as NPA, which means even though you are classifying a defaulted loan, even though you are classifying defaulted loan as a standard asset, just because government guarantee is there, just because of government guarantee, you are classifying it as a standard asset. But for income recognition, no, let's not classify it as standard asset. Understood? So what here the bank did, the bank, no, they have few advances which were guaranteed by central government. However, there is guarantee was not invoked and advance were overdue, and these are classified as standard asset and were regarded as NPA for income recognition. Is this correct or not as per the RBI circular? Yes, it is correct. Fine. Second, some advances are guaranteed by state government as a part of power generation initiative. However, the guarantee was not invoked and advances were overdue by 80 days. These advances were also classified as standard. Yes, since overdue is less than 90 days, they are classified as standard asset, which is correct. But what if it is 90 days crossed? It is NPA because the advance guarantees by state government. Only for central government, RBI circular applies. For state government loans, RBI circular will not apply. Moreover, they were regarded as NPA for income recognition purpose. Yes, for income recognition purpose, anyhow it is NPA. We don't recognize it as NPA. But here, standard asset, they recognize it because they are overdue by 80 days. It is still standard asset. Action is correct. But though it is state government, loans and advances were overdue by 80 days. Up to 90 days, it is allowed. Up to how many days? 90 days it is allowed. We can still classify it as a standard asset and were regarded as NPA. Of course, this treatment is correct only. As of now, the treatment is correct only. Next, we'll see. Additionally, XYZ Limited is a borrower availing cash credit facility of 110 lakhs. Just a minute, Bharat. One. Wing. Keep it above. Top direction. Additionally, XYZ Limited is a borrower availing cash credit facility of how much? 110 lakhs against security of paid stocks and debtors up to 90 days. Like you are giving security to a banker to get some cash credit facility of how much? 110 lakh. What are you giving as a security? You are giving as a security paid stock. What do you mean by paid stock? In my godown, so much of inventory is there. Not entire inventory is paid stock. Out of that, some stock is belonging to creditors. Until I repay them, creditor will have a first right on that right. If I do not repay, he can come back and take the inventory, yes or no. So that I cannot give it as a security because that's first of all not my own asset in absolute sense. Correct? So debtors up to security of paid stock and debtors up to 90 days. Margin stipulated was 25% for stock, 40% for debtors. Which debtors bank will consider as security? Debtors whose credit period is less than, only that banker will consider it as a security. If it is more than 90 days debtors, no, banker will not consider. Bank has calculated drawing power based on the following information. So XYZ gave the following asset information. What is the asset information? Value of stock as on 31st December 130 lakh. Value of debtors as on 31st December 75 lakh. Value of stock fully damaged and included in 130. How much it is? 7. We should eliminate this 7. Damaged stock will not be considered as an asset by the banker. It will not be taken for security valuation. Banker will not consider damaged stock into security. That he will not. Value of debtors exceeding 90 days. As per the bank norm, what? Up to 90 days. So this will also be not considered. But this value is also included within the 75 late. So which means net debtor value is how much? And here net stock value is how much? Correct? Now, okay. Value of creditors for goods, how much it is? 60. Now you see here they give value of stock. Which stock? Own stock? Full stock or only paid stock they didn't give. Which means they gave value of the stock. Means total stock value they give. Out of which 60 lakhs you are still liable. Which means how much will be considered for asset security purpose? 123 minus 60. Which means 63 lakhs only will be considered for security of stock. How much worth of value of stock customer gave? 63 lakhs worth only. Because out of 130, 7 lakhs damaged, 60 lakhs creditor is there, 63 only your own. Yes or no? Now tell me, banker will banker give you entire 63 lakhs worth of loan? No. He will keep margin. How much margin? 25%. So 63 lakh minus 25% is equal to how much? 47.25. Okay, 47.25. Okay, very good. Now debtors, no. How much is there? 75. Minus 10 lakhs is not considered, right? How much balance? 65. Will banker give 65 loan? How much he will give? 40. 40% remove it. 39. Total how much banker will give you? 47.25 towards the stock security. 39 lakhs towards debtors security. This much only banker can give. But how much banker gave here sanctioned? Okay. He gave sanction limit 110 lakhs probably. Additionally, this sanction limit it might be. We don't know. Is it drawing power or sanction limit? They didn't give. But we'll see depending upon the question what they are asking. How much drawing power? 86.25 is a drawing power. That is the maximum amount permitted by a customer to withdraw against the security details as mentioned above. Correct? Next. Also, the outstanding balance in one of the loan account was 25 lakh and the realizable value of the security as assessed by the banks was 2.25 lakh. Oh my God. There is a customer account. In his account, what is the outstanding balance? 25. And customer, when he took the loan, no, he would have given some security, right? That security, when they do valuation now, the value is 2.25 lakh only. Now, the outstanding loan is what? 25 lakh. Now, security value is what? 2.25 lakh. The value of security is less than 10% of the outstanding loan. The value of security right now is less than 10% of the outstanding loan. But you know, customer may be repaying regularly. Even today also is repaying regularly. But we don't consider that fact. RBI special NPA norm says if customer outstanding loan and the security offered by the customer, the revised value of the security, if it is less than 10% of the outstanding loan, straight away ignore the security. Entire 25 lakhs treat it as loss asset. Entire 25 lakhs treat it as loss asset. This is special NPA norm. We have special NPA norms. Assets regularized at balance sheet date, staff advances, agricultural advances affected by natural calamities, and consortium of advances, advances guaranteed by central government, advances guaranteed by Kisan Vikas Patra, Indra Vikas Patra, National Savings Certificate and term deposits. Like that we have special NPA norms. Getting it? Other than normal NPA norms of 90 days out of order that. So in case of special NPA norms are applicable, that special norms only we have to apply. If a customer security whoever offered for taking a loan, if the security value is less than 10% of the outstanding loan, straight away security whatever is there, ignore it. The entire loan classified as loss asset. So bank identified same as erosion in value of the security. So what bank did because of this? They consider it as a erosion in value. Security value is gone completely. It was classified as a doubtful category. No, it should be classified as loss asset. And provision was made for doubtful. No, it should be created. 100% write-off must be done. Further, A discussion took place among the team members. Team means what? Audit team, engagement team, regarding issuance of audit reports after completion of bank audit and annexure to same, such as, like, once we complete the bank audit, we have to give various reports to bank. Central auditors has to give various reports. What are the additional audit reports? Long form audit report, report on compliance with SLR, report on treasury operations, report on compliance as per ghost committee recommendation, report on adverse credit deposit ratio. What is it? Deposit. But they gave a report on lending ratio. No. Credit to deposit. How much deposits I have accepted, how much credit I gave. That is the ratio report that auditor has to submit. Not credit lending ratio. No, there is no such ratio called credit to lending. Credit itself means lending. Lending to lending ratio what? Correct? Huh? So credit to lending ratio is incorrect. It's actual deposit. Okay, fine. Case study is over. Now the questions they are asking. With respect to overdraft facility sanctioned to times limited, the account would be termed as out of order. When account is termed as out of order, if the outstanding balance is more than sanction limited drawing power. Let us see. And two, the outstanding sanction limit crossed. Both the cases, drawing power, sanction limit, outstanding amount crossed. Then it is out of order. Two, it is less than sanction limit and drawing power, but there were no credits for 90 days. Then also it is treated as out of order. Or credits were there, but not sufficient to recover debits. Then also it is treated as out of order. Fine. The account would be termed as out of order if the outstanding balance remains continuously in excess of 75. In this question, 75 is what? Sanction limit. Then we will treat as out of order, correct? The outstanding balance remains continuously in excess of 50. Yes, this is what? Drawing power. Then also we will treat it as, out of order. The outstanding balance in the account is less than 75, but there are no credits or payments deposited into bank continuously for 90 days. Yes, then also we will treat as what? Out of order. The outstanding balance is less than 50. No, if the outstanding balance is less than 50, that is not the criteria for out of order. For out of order, criteria is debit is there but no credit for 90 days. That is what the criteria. Just because outstanding balance is less than 50 lakhs, information is insufficient to decide. So in 1, 2, 3 cases, can I call it as what? Out of order? Yes. So choose the correct option. 1, 2, 3. Correct? Option A. Agreed. Which of the treatment by the bank on provisioning and income recognition is correct in case bank guarantee was given by central government and state government? Like bank guarantee given by state government and central government. Central government gave a guarantee. They were overdue by 75 days. These advances were classified as standard asset, which is correct, and regarded as NPA for income record, which is also correct. State government as a part of power generation initiative. However, the guarantee was not invoked and the advances were overdue only by 80 days. These advances were also classified as standard asset, were regarded as NPA. Technically it is correct, but the answer was wrong. They gave only statement 1 is correct. They said only statement 1 is correct. Even statement 2 is also correct because overdue is right now. If it is more than 90, then I would have said, since, see, suppose here it is 95, here it is 95. Let's assume both are 95. First statement will still be right. Second statement will be wrong. But here both are less than 90, no? When it is less than 90, how come I apply? Normal customer itself up to 90 days, I am giving NPA provision facility, standard asset facility. State government guarantees also there moreover. And moreover it is less than 90 days. Why don't I classify this as a standard asset even if it is less than 90 days, correct? So technically speaking, both the statements are right. How they interpreted is because they have given here wrong number, probably. Here the number is supposed to be, let us assume 100 days. In that case, bank classifying it as a standard asset is wrong. Getting it? Because state government guaranteed advance, there is no special treatment. It is treated as if the loan given to normal customer. Are you getting it? So in such case, only statement 1 will be right. So according to me, both the actions are right. According to me, both 1 and 2 are correct. According to me, because in both the cases, overdue is less than. You are getting the point? Yes. Yeah, please. Which one? No. They may be. The moment it become SMA, they may stop. They may have stopped income recognition. Banks voluntarily would have adopted that. This is a case study. Inbuilt some possibility of error is there. By default, some possibility. Banker itself voluntarily applied that. Technically, they are supposed to classify more. They are technically supposed to give more than 90 days logic. They are technically supposed to give more than 90 days logic. By keeping it less than 90 days, the way they are asking question is wrong. Technically, the questioning is wrong. Because up to 90 days, how come I classified as NPA? His doubt is, up to, since it not crossed 90 days, up to it crosses 90 days overdue, income can be recognized on accrual. So technically the question is right, but here they gave, here number of days they gave, no, this is wrong actually. This is wrong. The number which they gave is wrong. It is not correct. Are you getting it? It should be more than 90. Technically speaking, more than 90. What normal customers 90 days I am giving. Now guarantee is also there additionally. Won't I give 90 days? You are getting the point? That's it. Generally 90 days logic will apply. Just that here guarantee is also there. Just that here guarantee is also there. Or banks may take a, or RBI would have given a clarification saying the moment government guarantees that 90 days logic may not apply. They may have given a, clarification that the moment guarantee, government guarantee is there, 90 days logic may not apply. Which means the moment it becomes overdue, it's an NPA. Which is wrong, right? Which is absolutely wrong interpretation, right? So that's why I took this interpretation and I conclude that this question is wrong or answer is wrong. Either the question is wrong, where they are supposed to give more than 90 days, more than 90 days. In such a case, statement 1 is right, statement 2 is wrong. You're getting it? See, for me, no, I will never interpret my logic based on the answer given. I will interpret my logic based on the provision. Sometimes answer might be wrong. So we'll see which answer they gave here. I'm not sure. We'll see later. Next. In the given case, drawing power is, we already computed 86.25 option A. Correct? Next. When you're solving MCQs, there is an approach. The answers are, in MCQs, no, the answers are 4 types. 4 options are given like this. Like they'll give you correct, wrong. One option. Correct, wrong. Another option, another combination of MCQ. Another combination of MCQ. Sometimes you might have felt this. All the answers appears correct only. Yes or no? What is that time how you should solve, Not wrong, correct. You're getting it? Not wrong. Not wrong means what? It's also right. But right is different from not wrong. For example, introduction, nature and objective and scope of audit, you recollect? In audit, no, we give 2 types of assurance. On audit, we give reasonable assurance, whereas in review, we give limited assurance. I told you there one example. Saying that it is good and saying that it is not bad. Both are different. Limited assurance is not wrong. Right is reasonable assurance. For example, auditor has to do risk assessment procedures, option A. Auditor has to do further audit procedures, option B. Auditor has to do both risk assessment procedure and further audit procedures, option C. Now tell me option A, auditor has to do risk assessment, is wrong? It's not wrong. Option B, not wrong, but option C is more right. That's how you should figure out when there is a conflict. If at all 4 options are saying right only, all the 4 options appears they are not wrong. In such a case, you should apply this logic. Sometimes not correct, absolute wrong. You're getting it? This is how MCQs will be framed. Generally, we know how to handle these 2 classes of MCQs, but we don't know how to handle these 2 MCQs. Now, if you know this kind of logic is what tested, you apply this logic. Generally, they will ask you, which of the following statement is not correct? It is when the real challenge. Which of the following statement is not correct? Not correct means you should pick up the wrong one. Absolute wrong one. 4 statements are not correct only. In such case, how should we become? Let's apply this analysis. 3 statement will be half wrong. 1 will be full wrong. You are getting the point? That's how you should apply. This logic is applicable in every subject. So these 2 classes of MCQ, anybody can answer. These 2 only few can answer. Getting it? Unless you don't know this analysis is there, you can't like differentiate the options. Right now I showed one example. So like that, it will be understood. Fine. Next, 4th MCQ. God, 30 minutes. Okay. The bank has identified. Actually, MCQs only we take time. Descriptive and all, mostly it will be easy only. The bank has identified an erosion in the value of security. Correct? And they made a provision for doubtful. That's wrong, right? Whether treatment by the bank as doubtful, is it correct? So if the answer starts with yes or no, that's not the option. So either this or this. 2 options containing no and no. We'll see the answer further. So the existence of security shall be ignored. Correct? And the asset should be straight away be classified as loss asset. It may be either be written off or fully provision will be created. Correct? We'll see the next one, D also. The existence of security shall be ignored, and the asset should be straight away classified as loss asset. Provisioning should be made for doubtful. That is wrong. That is absolutely wrong. Yes or no? So the answer is B. 4th one, the answer is B. Clear? Next. I was thinking, how come you're able to answer bank audit all the questions in spite you didn't read? Now I recollected. Okay, you already studied earlier. Oh, advanced accounts have all these provisions. Previous attempt, old scheme. Okay, got it. Right, okay, fine. 5th question. The statutory central auditor of bank must furnish, in addition to the main audit report, various other reports. Correct? We have seen what reports they furnished. From the options given below, choose the audit reports that Viswacharya Associates shall furnish. Long form audit report, they must furnish. Report on compliance with SLR, they must furnish. Report on treasury operations, they must furnish. Report on compliance with Ghosh Committee, they must furnish. Report on adverse credit, no, this is not required. Adverse deposit is required. So these 4 they have to furnish, no doubt. So the answer is 1 and 2, 1, 2, 3 and 4. 1, 2, 3 and 4. B. You clear? So 1 case study is over. 10 marks is over. Technically, for 10 marks, what should be the time that you should spend in exam? 18 minutes. We spent close to 36 minutes here because we are discussing the concepts also. If at all I straight away go ahead discussing the case study and relevant logic only and discuss and put the answer, it will be less than 18 minutes for sure. Agreed? I explained NPA provision full. NPA classification also I explained fully. Yes or no? So much I explained. That's why it was 35 minutes. Next. Case scenario 2. Priority Limited is a large company engaged in manufacturing of terry towels, making steady profits on year basis. So every year they are making steadily the profits. PMR and Associates are stat auditors of the company since last 2 years. Just checking whether recording is going on or not. PMR and Associates, statutory auditors of the company since last 2 years, are in the process of establishing audit strategy for conducting stat audit under Companies Act for the year 23-24. Okay. Remember the case study? The company has 5 branches which are audited by independent auditors appointed under company. Okay, branches are separately audited, which means branch auditors were there. Remember SS 600 State Bank of India example? Very good. It also has a wholly owned subsidiary company which is audited by another audit firm under the name of JGL. Oh, subsidiary company is audited by another auditor. They are also component auditor only. Branch is also component. Subsidiary company is also component. Subsidiary is component for which financials? Yes sir. Consolidated financial statements. Subsidiary company is a component for consolidated financials. Branches are component for. Yes. Now I understood your SR. The engagement team has noticed that. The engagement team has noticed that company has maintained several bank accounts. Okay. And there is a substantial movement in deposits. During the year, Okay, substantial movement in the fixed deposit during the year leading to risk of MMS in cash and cash equivalent. Okay, the auditor found there are so many bank accounts were there, so many deposits were there. There is a high movement in these deposits where auditor felt high risk is there. Recently in Cafe Coffee Day, just 5 days back, KPMG auditors were banned. Two KPMG network firms were banned for 5 years. Where NFRA, you know NFRA, they levied a penalty of 10 crore on KPMG with respect to audit of Coffee Day for 18-19 years. With respect to Coffee Day of 18-19 years. And what's the fraud, you know? In 18-19, Coffee Day has diverted so many funds through bank statements, which the KPMG auditors failed to detect. Exactly the same risk. Same exactly is what identified. But this MTP was released much before that fraud was discovered. But still see how they predicted this. So there is a high movement. There are so many bank accounts, high movement in bank accounts. This is a fraud risk factor. Cash and cash equivalents. The engagement team had planned the procedures regarding the same. So they have observed all this, like branches were audited by 5 branch auditors, subsidiary company was audited by so and so, and the engagement team has noticed so many bank accounts, and there is so much of movement in fixed deposits, all this. Now the engagement team, they planned the procedures regarding the same. So the following are the procedures planned. At planning stage, engagement partner is also trying to set materiality for financials as a whole. Materiality discussion I have given in risk assessment chapter. Risk assessment chapter. The following information extracted from the financials are as under: revenue 100 crore, total is at 40, profit before tax 8, total liability 30. You know, the auditor want to set materiality, right? Materiality in this case can be set as a percentage of a benchmark. Materiality will be decided as a percentage of a benchmark. What benchmark we will use, which benchmark we will use, that benchmark which is very representative for the company. And you see in the first line they have given, the company is making steady profit year-on-year basis, means profit is steady. So we can take profit before tax as the benchmark for this company. We can take it. Alternatively, you can take revenue also. Generally, worldwide revenue benchmark is what accepted, even in India too. PBT benchmark, even though profit is steady, we will not consider. Revenue is the right benchmark, but in the answer they gave PBT benchmark. Even in the SEA 320, when I'm discussing, in that example also PBT is discussed. Because no, PBT is a steady, because the company is making steady profits year-on-year basis. Same amount of profit is there every year. Means profit before tax is constant every year. Similar. Constant means minor variation could have been there. Fine. Next. Further, second part. While designing Bharat, no pike petali. While designing, okay, they're adjusting. Okay, pa. While designing a sample for verifying revenues of company as a part of test of details, you recollect 530. Engagement partner has determined a tolerable misstatement for 5 lakh in order to address the risk that aggregate of the individual immaterial misstatement may cause the financials to be materially misstated and provide a margin for possible undetected misstatement. Tolerable misstatement is kept at 5. What are the factors that affect sample size in case of test of details? What are the factors that affect sample size in case of test of details? 1. Risk of MMS. 2. Expected material misstatement. 3. Tolerable material misstatement. One of the. If tolerable material misstatement is kept low, risk is high. If tolerable misstatement is increased, it means that risk is low. Correct? One of the newly joined team member has little conceptual understanding of tolerable misstatement determined by engagement partner. He also has no idea of effect of change in tolerable misstatement on a sample size. What is the effect of change on the sample size? Tell me, if I increase tolerable misstatement, risk is low. When the risk is low, sample size will decrease. Tolerable misstatement we are keeping very low. Means we are not even tolerating small mistakes. Yes or no? Risk is high. Means sample size will be high. This is the effect of tolerable misstatement on the sample size. We discussed it in 530 clearly. During the course of audit, While performing test of details, engagement team came across certain misstatements in selected sample pertaining to verification of revenues. The team has also projected misstatements to population of revenues. Okay, they identified some misstatements in sample they selected. Once we identify misstatements in sample, no, we should project it, correct? Before projecting, we should classify this misstatement into two categories: anomaly, non-anomaly. Is it anomaly? Non-anomaly. We should classify. After classifying only we should project. When we are projecting, anomaly should be excluded. Anomaly should be excluded, and remaining misstatements which are considered to be repetitive in nature, that we need to project. The team wants to comply with SES strictly 530 standard. Okay, this is the case study. Based on the above facts, answer the following. The auditors of a company are in process of establishing strategy, right? Which of the following is not a relevant factor in establishing overall audit strategy in the case scenario? Which of the following factor is not? The company, consideration of 5 branches by independent auditor? Yes. Consideration of wholly owned subsidiary company? Yes. For planning, for developing strategy on audit of consolidated financials, we consider. Expected time of holding AGM in accordance? Yes, we have to consider, because we must know by when we should complete audit. Yes or no? Nature, timing, extent of planned procedures for cash and cash equivalents, I will not consider. This is considered in planning process. This is not considered in strategy process. Overall audit strategy is a document that sets scope, timing, direction of the audit. It covers only whole aspects, like what is this entity is doing with, who are the component auditors, what is the timelines for reporting, what are the reporting objectives, what are the preliminary engagement activities. Only overview I will consider. I will not look into each and every individual area. Petty issues I will not look into. Are you getting it? So which means, who is auditing subsidiary company, who are auditing branches, these are all relevant for me, so that I have to develop, I have to strategize my audit. Then I will develop plan based on my understanding. You're getting it? So D I will not consider in strategy formulation, because it is dealing with one petty area called cash and cash equivalents, which I generally address in planning the audit. There are 3 terms: strategy, planning, and performance. Once you see the chapter, you will understand. Next. For priority limited, which benchmark should engagement partner most likely to use setting materiality for financials as a whole? Which benchmark? Which one? Profit as a percentage of PBT. But I can even say A is also right answer. In fact, internationally A is accepted. Getting it? But since here C they selected, we are selecting C. They should not give like this conflicting answer. But since here I concretely selected the logic, making study profits, and even in the example given in the pronouncement of ICA also, they said the same point. So that is the reason why examiner would have copy pasted that question and asked. Next. Further, in the given scenario, assume that engagement partner has decided to increase the tolerable misstatement to 10 lakh. While designing sample, select correct statement. Increase in sample size, increase in tolerable misstatement means risk is low, which means sample size will decrease. It would lead to decrease in sample size, but don't conclude the answer now itself. You may see increase in sample size wrong, no effect on sample size wrong, not possible to draw in inference on the sample size. No. So the answer is A. Clear? Next. While performing procedures on designed sample, the engagement team identified certain misstatements in selected sample and projected these to entire population of revenues. Okay, that is what they're doing is correct only. According to the requirement of SA 530, nothing but. Which statement is correct? Anomalous misstatement is auditor's best estimate? No. The projected misstatement plus anomalous misstatement, if any, is best estimate of total misstatement in population, which is actually correct. When we are evaluating total mistake in the population, projected we should consider, anomaly also we should consider. But when we are projecting, anomaly should be ignored. What is anomaly? Anomaly is something that is not representative of population. Anomaly refers to a misstatement or deviation that is demonstrably not representative of population, and hence an item which is considered as anomaly should be excluded from projection. Exclude anomaly, non-anomalies and all you consider, projected plus add anomaly, you will understand total mistake. The total misstatement you will understand only by adding projected plus anomaly. The book, it is there clearly. I think somewhere in the last questions in sampling, it will be there. The best estimate of misstatement can be done by auditor only when he is evaluating both projected misstatement plus anomalous misstatement. B is the correct answer. We'll see. When projected misstatements exceed tolerable misstatement, sample provides a reasonable no. When projected misstatement plus anomalous misstatement exceeds a tolerable misstatement, sample provides reasonable no. The answer is B. These are all statements wrong. All these statements were there in our book. And we explained it. You're getting it? I know this is a bit tough because you have not yet gone through this entire videos. This appears little tough. Next. This is option is B. Case scenario 3. Bandhu Charitable Trust is considering appointment of MNO associates, okay, chartered accountants as independent auditor of the financials. It's a trust, first understand. The trust is engaged in providing healthcare services. It is interest of both auditor and client to issue an engagement letter so that possibility of misunderstanding is reduced to great extent. Yes or no? We understood this in terms of engagement. It is therefore important that each party should be clear about nature of the engagement. It should be exactly specify the scope of work. Such an engagement letter is exchanged between trust and auditor. Who will give to whom? Auditor will give it to trust. Correct? While performing audit procedure, it is noticed by auditor that bills of two vehicles are not in the name of the trust, but in the name of the trustee. Sometimes it is possible because no bank may not give loan. Trustee name, if it is there, trustee would have been filing ITR from so many years, income proof and all is there. So banker will give loan to trustee as a part of the condition, trustee name is given. But it is asset, but the loan repayment, purchase, everything is amount is paid by whom? Trust only. However, payment of these vehicles were made from bank accounts of the trust. The said vehicles are used for activities of the trust. Very good. Next. It is also noticed that a sum of 50 lakh is reflected in trust financial statements in the name of Gamma instrument and equipment in the schedule of creditors. Okay, there is a 50 lakh rupees outstanding to Gamma. Yes or no? Gamma instrument and equipment. The said amount is outstanding since 2 years. Long outstanding creditor. Yes or no? Schedule of creditors. Fine. The auditor sent a confirmation request to the said supplier and seek management's cooperation in this regard. Correct only. With the management's authorization only, we can send a confirmation to third party. Remember confirmation to third party? Yes. However, management of the trust informs the auditor regarding certain dispute going on with the supplier of equipment due to some quality issues. Management, the auditor approach management. I want to send like this. Immediately what management reply? No sir, please, there is a dispute going on with the supplier. Let us not go for external. It is further informed that dispute is near settlement. It is not proper to send confirmation at this moment, which can affect negotiation process. So the company is requesting the auditor. When management refused the auditor to go for external confirmation, what auditor has to do? Obtain evidence through alternative procedure. First we will ask the reason why they are refusing. We will see whether it is valid or not. If it is valid, we will try to get evidence through alternative procedure. If that is also not possible, then we will modify the opinion. That's it. Extraordinary. Very good. Based on the above facts, answer the following. Based on the above fact, answer the following. As regard exchange of engagement letter between trust management auditor is concerned, which of the following is likely to be true? Engagement letter is sent by MNO associate to Bandhu Charitable Trust. It includes reference to expected form and content of the report to be issued by them, and a statement that there may be circumstance in which such report may differ from its expected form and content. Once again I'll repeat. I know I understood that you didn't understand. Engagement letter is sent by MNO associate to the company, to the trust. It includes expected form and content of the report to be issued by them, and a statement that there may be circumstance in which such report may differ from expected form. This is actually correct. Engagement letter will contain discussion about expected form and content of the audit report. How can you expect our audit report in what form? And I will also tell them, based on circumstances, the expected form and content might vary. Indirectly, I am saying them, I generally try to give you 700 opinion, unqualified opinion without any additional information. But if circumstances arises, I will also give you additional information in the audit report that modify the expected form and content of the audit report. This fact I will mention at the beginning itself. Correct? I even read and explained engagement letter in the original class, if you recollect. So this option is correct. We'll see. Engagement letter is sent by Bandhu. No. Engagement letter is sent by MNO associate to Bandhu Charitable Trust. It includes reference to expected form. However, it does not include a statement that the report may differ. That's wrong. It shall include a statement that circumstances might necessitate me to modify the form and content of the audit report. Engagement is sent by MNO to Bandur and it does not include reference to expert. That's wrong. So answer is A. Understood. In MCQs, whenever you are answering, don't just conclude based on the first option. Read all the options, get an assurance that remaining 3 are wrong, and then only select the right answer. So it is not just figuring the right, figuring wrong also important. Understood? That is how your success rate in MCQ will be very high. Next. Considering the issues related to vehicles, what is happening in the vehicles, by the way? They purchased vehicle, company trust paid, but they were in the name of the trustee. As described in the case study, identify the most appropriate statement. Oh, they gave some statements. Which is appropriate, they're asking. Fine, let us read. Auditor have identified misstatement concerning existence assertion. No, we are not concerned about vehicles are there or not. Auditors have identified misstatement concerning rights and obligation. Auditors are concerned about ownership here. Ownership means what? Rights and obligation. Auditors have identified misstatement concerning accuracy. No, that related information itself is not given. Auditors have identified misstatement concerning completeness. Irukide rendu vehicles. So only the vehicles that are there are only 2. Getting it? So complete vehicles are accounted. No, that discussion itself is not there. So here auditor is concerned about what? Vehicles are not in the name of the company. So B. Correct? That's it. Next. What course of action should the auditor take regarding the amount payable to supplier, equipment supplier? Creditor, 50 lakhs outstanding, 2 years outstanding, yes or no? When management has communicated that sending could negatively impact. So what action auditor should do? First ask whether there is a valid reason. If so, I have to perform alternative procedure and get the evidence. First, the auditor should issue adverse. Wrong. The auditor should seek evidence as to validity and reasonableness of the reason for refusal and perform alternative. Yeah, that is right. We'll see next option also. The auditor should withdraw, not required. The auditor should disclaim, not required. B. B is most appropriate. Getting it? That's it. Next. So option is B. 13th question. TA Prince, after developing the audit strategy for Vedika Limited, develops an audit plan but finds the need to revise materiality levels set earlier, and therefore a deviation from already set strategies felt necessary. In this case, he should drop the audit and withdraw. Not required. Obviously, when we plan the audit and go, no, as circumstances we may find where we will have to modify the strategy and plan. Devise new audit plan and then change. No. First we have to change strategy and then plan. First modify strategy and thereafter prepare the audit plan according to the modified. I think this is correct. Continue with audit plan without. No. You should modify the strategy and plan depending upon the circumstances. C. Easy. Next. Jasmine was of the view that audited financials are not a guarantee against probable wrongdoings in the financials. She is correct, absolutely. What kind of assurance does the financial statements provide? Generally, reasonable assurance, which is a high level of assurance. Reasonable meaning low level, wrong. Reasonable assurance meaning high level. Provides reasonable meaning absolute. Provides reasonable meaning moderate. No. So the answer is B. Correct? T. Raman instructed his article Raju to verify whether employee benefit expenses of company has been fairly allocated between operating expense incurred in production activity and general expense. Here they are not asking about recognition of employee expenditure valuation. They are asking about whether the presentation of employee benefit expenses between general expense and production activities, presentation is done properly or not. Classification we can also call it as, but classification word generally we use the word when it is directly in the balance sheet and P&L. When it comes to breakup given in the notes to accounts, we use most appropriate word called presentation. Which of the following assertion, presentation and disclosure? Yes or no? Thank God they didn't give classification. If they give classification also, how should you figure out? Classification means in the main balance sheet P&L. Presentation deals with the notes to accounts. That's it. The answer is B. Shall we see the answers? Cross verify. Yes. So 15B, yes or no? And 14, yeah, B. And 13, C, 12B. 13C, 12B. Then 11B and 10A. 11B, 10A. Then 9B and 8A. 9B, 8A. 7C, TD, CD. Here we didn't put answer. Okay, okay. Don't do only that. CD. CD, correct? Then first case study related. So BB, triple A. No. Okay, okay. So we'll see their answer. BBAA. This answer I told BA. Correct? Both is correct. Technically speaking, but they gave C. Probably the question is wrong. That's it. And I told you my argument clearly there. That's it. Next. So with this MTP 1 is over. So we'll do one thing. MTP 2 MCQs also will cover. MTP 2 MCQs also we will try to cover. And then finally we'll discuss descriptive papers in MTP 1 and MTP 2. Or else okay, we'll do one by one. Let's better finish. MTP 1. MTP 1 descriptive only. How much time it took until now? 1 hour only. 1 hour means 15 marks. 30 marks. 30 into 1.8. Almost 24. 54 minutes. 1 hour we completed with explanation. We are very much fast. With explanation we discuss it, no? Which means we are very productive. 54 minutes is the time to solve 30 marks paper. So technically we completed. Really good. Next. And I feel you're very participative also. Very good. Subodh. Yeah. My energy is also increasing. Just 2 minutes. Yes. Subodh has recently joined an audit firm as an articled clerk. He was in the process of assembling audit working papers in audit file of COP Limited as per the instructions of his senior. While assembling, he noticed the following work paper: timing of audit activities. Timing. There is a document called timing. Audit planning was on so and so date, review by EQs here on so and so period, audit field work is on so and so, review by manager so and so. By the way, have you completed SQC SA 220? Which I discussed at last. After items of financial statements I have covered. Pakka 5 marks question on that. Hardly we discussed 3 to 4 hours. Hey, what happened? Yeah. So review by engagement partner, review by engagement quality control reviewer, so and so timing sheets, which date, what we did, all that briefly. Finalization of the report, issuance of audit with the various dates and all, timing of activities. Nothing but this deals with timing of activities. The above working paper lists certain factors which are considered by the auditor while establishing strategy. While establishing strategy, this is considered by auditor. Explain how these considerations highlighted in the working paper could have helped the auditor. While developing overall audit strategy, reporting objectives of engagement team. Second item. Characteristics of the engagement. Second objective. Reporting objectives of the engagement team. Third one, results of preliminary engagement activities. All that, like that, 5 items were there in overall audit strategy. So one of the item which we considered is timing of the reporting objectives of the engagement team. That reporting objectives you have to define. So they are asking, explain how these considerations will help the auditor. Reporting objectives means what? They have given. You see, one of the factor while establishing strategy related to ascertaining of reporting objectives of the engagement to plan timing of the audit and nature of the communications required, especially entities timetable for reporting, organization of meetings to discuss NTE with management, discussion with management regarding expected type and timing of the report, discussion with management regarding communications, expected nature and timing of communication among team members, including nature of team meetings, timing of review of work performed. This is in-depth explained in audit strategy chapter. Okay, in the given page, working paper highlight that auditor has taken into account expected timelines to plan the audit and nature of the communications required. Since work paper related to stat audit, the ascertaining of reporting objective helps the auditor to plan timing of different procedures and also nature of communication. If I know roughly when and all I'm going to talk, review by manager, all this, if I have a brief idea, I can plan my audit effectively by coordinating with all these people. Reporting objectives of engagement team, we call it as, what is it? Reporting objectives. In strategy chapter it will be there. Next, Tina, while inspecting financials of the company, notices that gross profit ratio of the company was increased from 14% in 20 to 23 to 24%. Okay, considering the above, she has assessed the risk of MMS to be high with respect to assertions relating to revenue and direct expenses. Tina wants to know few possible reasons which could have led to abnormal jump in gross profit ratio. Suddenly, how come gross profit increases from 14% to 24%? Discuss the discussion among team members. Her junior Trisha explained her view that detection risk in this engagement should be kept at a high level. When risk of MMS is high, generally detection risk is low. When the risk of MMS is high, generally detection risk is low. Risk of MMS high means what? Here there is an abnormal jump in gross profit. Naturally, auditor has expected that there is a high possibility of fraud in revenue and direct expense accounting that resulted in overstatement of gross profit, where auditor has already classified it as a high risk. So auditor will be no doubt verifying direct expenses and revenue at a larger level, which means detection risk generally reduces. So Tisha argument that detection risk should be kept at high level is wrong. It is wrong. Getting it? Detection risk will be high when there is an indication that management has colluded. When there is an indication that management has colluded and manipulated entire financial statements, where they concealed everything, their detection risk is high. There the detection risk is high. Risk of MMS is high, detection risk is also high. Both are high. Are you getting it? List out few possible reasons which could have led to abnormal jump in. So generally, what could be? Probably revenue expenditure is treated as capital expenditure, direct revenue expenditure, overstatement of sales, recognizing sales early without considering cut-off procedure. Yes or no? Not recognizing purchases which are made in the last period. Like that, few examples you have to give. So what they give, we will see. Overvaluation of inventory, overstatement of revenue, understatement of direct expenses. Yes or no? Second one, Tisha is of the view that detection risk and engagement should be kept at high level, whereas in the given situation, risk of MMS has been assessed as high for the assertion. Therefore, detection risk has to be kept at low level so that MMS in this assertion does not remain undetected. Therefore, view of Tisha is not proper. That's it. So, as per SE 200, it defines detection risk as the risk that procedure performed by the auditor to reduce the risk to an acceptably low level will not detect a misstatement that exists and could be material either individually or aggregated with other misstatements. So detection risk means the risk of not detecting an error. The risk of not detecting, or detection risk means it's a risk procedures performed by the auditor. Procedures performed by the auditor to reduce audit risk will not detect a misstatement that exists. Obviously, why are we doing audit procedure? Ultimately, to reduce audit risk. What is audit risk? Risk of expressing an inappropriate opinion when the financial statements are materially misstated. Very good. Next. Expert Industries Limited is engaged in petrochemical business. Due to nature of its business, the company hired PQR Associates, a reputed firm of chartered engineer, to determine quantity and valuation of inventories for preparation of financials. Okay, to determine quantity and valuation of inventories for preparation of financials. Okay, they hired PQR to valuation of inventories and for preparation. The auditor of Expert Limited want to use the same as audit evidence, using the work performed by management expert. Management expert here. In audit evidence chapter, What are the sources of availability, sources of evidences? Inside that we have 2 points. Evidences created by management expert and evidence provided by the management. When we are using evidences that are prepared by management expert, we should evaluate his competence, independence, objectivity, whether the expert is subject to performance of professional standards, all that we will see. Before using the work of PQR, here PQR associate is what? Expert, management expert, whose work in that field is used by management for preparing financial statements. Management expert, what aspect should be taken care? Very simple. Evaluate the competence, capability, objectivity. Get an understanding of the work of the expert. Evaluate appropriateness of the work as an evidence for relevant assertion. Here, what assertion? Valuation they are checking mainly, and one more thing they are checking. One more evidence. One more thing. One is valuation and preparation of financials. Okay, fine. Quantity. Determine the quantity. Quantity means existence. Valuation means value of the inventory. Two assertions they are testing. SEPT Private Limited is a startup that has been in business for about 2 years. It runs an application which provides valuable information pertaining to nutrition and helps its client to access customized healthy food. There is an app in Instagram, Healthify. Example that told this. Healthify, which was once upon a time aggressively promoted. So aggressively they did campaigning. The company's revenues are expected to grow in the coming period. Okay. Although the company has reflected net losses in its financial statement for the last 2 years. Last 2 years, it's losses only. It has managed to meet its financial commitments. Still, they didn't default anybody. They're paying salaries on time. They're paying creditors on time, everything. The financial statements of last 2 years were prepared on going concern basis, which is good because they are meeting commitments, and that too it's a startup. Losses are common in startup that do not affect going concern of the startup. Probably they might be having fund. The management of the company wants to follow the same basis of accounting this year. Is the view of the management appropriate? How does going concern affect the financial statements? If going concern assumption is missing, all the amounts, assets and liabilities must be valued to NRVs. What value they realize? Yes or no? That is the importance. Because of the going concern, company will be using the assets and generate cash flows that are more than the carrying value of the asset. You have impairment standard in advanced accounts. In impairment loss, when do we calculate impairment loss? Carrying value, recoverable value minus carrying value is equal to impairment loss. If at all it is positive. If it is negative, no impairment loss. If recoverable value is less than carrying value, it's an impairment loss. Recoverable value means what? Right now you sell the asset, how much you get? Or use this asset for next 5-10 years. How much cash flow you can generate? Whichever is higher. NRV or present value of discounted cash flow, whichever is higher, minus carrying value is equal to impairment. The company probably, if they follow going concern, what do you mean by going concern? Why will I close now? I will continue business. I have funds, enough funds were there. Though I am having losses, I continue the business. I generate cash flows, which is more than the carrying value. So I will choose going concern basis of accounting. So that could be the argument of the company. So here how they gave answer, you see. Going concern is one of the fundamental accounting assumption. Under the going concern base of accounting, the financial statements are prepared on the assumption that the entity is a going concern and will continue the operation in the foreseeable future. What is foreseeable future generally? Minimum 1 year from reporting date. General purpose financials are prepared using going concern base of accounting unless management wants to liquidate the entity or cease operation or has no realistic alternative but to do so. Means there is no other option except closing the business. In the given situation, company has reflected net losses in the past 2 years, but is able to meet the commitments. By the way, net losses is a financial indicator. Yes or no? This is an indicator that may cast a doubt on the entity's ability to continue as a going concern. The revenue of the company is also expected to grow in the coming period. It shows that management has neither the intention nor the necessity of liquidation or curtailing materially scale operations. No. Therefore, view of the management following is appropriate. Further, significance is its effect on the preparation of financials. Going concern is so significant because its effect is on financials is very high. Ability of an enterprise to be viewed as going concern affects its preparation process. For example, inventories may be need to write down as they may be sold for lower price. Assets may have to be recorded at likely prices they will fetch if at all going concern is missing. Are you clear? Everything will be recorded at NRV. Everything will be recorded at NRV. That's it. If going concern assumption is missing, balance sheet will not tally. They may not tally. First of all, if going concern assumption is missing, if going concern is inappropriate, we may not prepare financials itself. They may directly go for liquidation. Next. PQR and Associates and M&Q, both form of chartered accountants have been appointed as joint auditors of Gamma and Beta Limited. Before the commencement of the audit, joint audit should discuss and develop a joint audit plan. Remember, when we're discussing joint audit, inside that one of the points, special consideration, inside that joint auditor shall develop a joint audit plan and they need to consider the following factors. Sub point. I told in the class that itself can be asked as a question. That one. In developing a joint audit plan, the joint auditor should identify division of audit areas and common areas. Explain stating the other relevant consideration in this regard with reference to standards on auditing. What are the other considerations where joint audit shall consider while developing joint audit strategy? They need to consider result of preliminary engagement activity. They need to consider reporting objectives of the engagement. They need to consider characteristics of the engagement. Same overall audit strategy. What factors? The same will be applicable. I told you when in overall audit strategy. Identify division of audit areas, ascertain reporting objectives, consider and communicate the factors that are significant in directing engagement team efforts, consider the result of preliminary engagement activities, ascertain nature, timing, extent of resources necessary. These are the same factors that are required for establishing overall audit strategy. Except this point will come exclusively for joint audit. Remaining are the points which are there in development of overall audit strategy, factors to be considered. Clear? Next. The management of Cool Drinks Limited suspected that some employees of the company may be involved in making fraudulent payments to dummy workers at various plants in the country. Okay, possibility of dummy employees and payment of dummy salaries. Therefore, they are considering appointment of firm of auditors to conduct audit involving detailed examination of accounts. However, one senior person among the board members, P, objects to use the word audit in the proposed assignment. Comment. Also discuss how audit is different from investigation. Here, they just want to know specifically about dummy employees. So, they appointed one firm. They are calling it as auditor to investigate the same. It's actually investigation, not audit. How audit is different from investigation? We have discussed in inherent limitations. First chapter NOIs, second chapter NOIs, inside that inherent limitations, inside that audit is not an investigation. Investigation is about establishment of a fact, whereas audit is about giving opinion on the financials, whether free from MMS. In audit, we give only reasonable assurance, whereas in investigation, we will give absolute assurance. In investigation, it's only a specific area, whereas in audit, it is all areas of the financial statements. Yes or no? They're asking difference between audit and investigation, the same question, straight question. Mr. Chetan is appointed as an auditor of Spot Limited, a small company. Chetan is aware that CARO is not applicable to small company. List out the classes of companies that are specifically exempted from CARO. A banking company, insurance company, Section 8 company, small company, one-person company, private limited company subject to 4 conditions. Not a holding or subsidiary of public limited. Paid up capital and reserves and surplus shall not exceed 1 crore as on balance sheet date. Total borrowings from banks and FI shall not exceed 1 crore at any point of time during the financial year. So turnover as per schedule 3, including revenue from discontinuing operation, shall not exceed 10 crore. That's it. Right question. Z Limited is engaged in manufacturing and export of shoes. The stat auditor of the company wants to reasonably ensure that only the inventories recorded in financials are exclusively owned by the company. Do not include any inventory that belonging to third party. Completeness. What is this? Completeness. But include inventory owned by the company but lying with third party. Nothing but whatever inventory lying inside the entity or outside the entity with third party, only own inventory should be considered. Getting it? No. Look at the question. Advise the auditor on audit procedure to be performed to achieve this assurance. Items of financial statements. Actually, it's actually items of. I gave a wrong reference. Getting it? It's actually what? Items of financial statements question. How to verify the, like ownership of the inventory? They are asking. Include inventories owned by the company but lying with third parties, and do not include any inventories that belonging to third parties. So only the inventories recorded in financials are exclusive ones. So they are asking what? Rights and obligation, ownership, and of course completeness, both. Items of financial statements chapter, audit of inventories, inside the rights and obligations, completeness, the discussion is there. Any 4 to 5 points you have to write. We'll see. How will I verify whether inventory lying with third party is recorded or not? Yeah, you see, auditor has to do analytical procedure. where auditor will do inventory turnover ratio comparison, vertical analysis, compare budgets with actuals. This is items of financial statements, not 501 standard question. It's not 501. I gave a reference there wrongly. Because I read briefly the question, I told my team to put this under 501 standard question. Because it is related to inventory. If it is given under items of financials, definitely the people will not read. Because items of financial itself is bulky. So these question I told my team to classify it under 501 intentionally. And it's not 501 question. It's an items of financial statements question. So we have a question bank covering all the September attempt, MTP, RTP, all that. We have a comprehensive question bank in the website. Like you can open this website. So you can open the website, and inside this there is a PDF resources. Rest of a CSMA website you can open. Group number 2 and notes, paper 5. Inside this there is a question bank. Latest edition 2024. This is question bank. September 24 MTP, RTP both are included. Just MTP 2 is not added. We will add it later. So in this standard wise we have given breakup for every question, for every chapter we have given all illustrations from ICA, all TVK question from ICA, and questions from MTPs, RTPs and past examination questions. 6 attempts we have covered. May 2022 onwards we covered. So up to May 24 is covered, and even now this September attempt is also covered. May 24 we didn't cover because suggested answer was not ready by the time we developed this question bank. Getting it? But now suggested answer is also there for May 24. So May 24 suggested answers were not added in this. MTP2 of September is not added in this, except these two. Rest everything we covered in this question bank. Getting it? Once you complete the concepts, then you solve this question bank MTP, RTP only. In each chapter, this segment you solve. In each chapter, MTP, question papers from RTP, MTP, QP is there na? In each chapter, that alone you solve. You see, audit report standard wise we gave questions breakup. Even in review, completion review, standard wise we give past examination questions. Everywhere, wherever standards are there, we give past examination questions, standard wise breakup. So you can comfortably read. Clear? Once you read that standard, read these questions relatively and try to understand enough. Next. Audit procedure to be followed, that only inventories held by inventories, they are owned by the entity and lying with the third party. Like what is the audit procedure to be followed? First, in this, they have given so much, right? You need not write entire. Any 5 points enough. Any 5 points. What points I will verify? Perform purchases and sales cutoff. This is the most important. Easy point also, cutoff. Look at the shipping documents to accounting records immediately before an year end. So cutoff procedure I will apply. Where if any sales are recorded and purchases are recorded at the year end, as well as next year beginning, first week, whether really shipment happened or not. When the shipment happened. If the shipment of goods is delivered, the delivery is completed on or before 31st March, it should be recorded as current year purchase or current year sale. Delivery is completed. If delivery is done in the next year, then it should be recorded as next year sale or purchase. That is what cutoff. Verify arithmetical accuracy of inventory listings. Reconcile physical inventory with the perpetual records. Reconcile physical count with ledger control totals. Reconcile inventories belonging to client but are held with third parties by external confirmation, transport copy, all that. Goods received on consignment have been properly segregated from other items of inventory. Consignment basis, whatever goods they are not owned by you, so they should be kept separately. So any 5 points you can write. This is items of financial statements question. Next. Amma, that is reporting requirement by auditor on inventory. In Caro, inventory means what? In the Caro inventory below, there are some points for there. The student doubt is Caro is also inventory dealing with that. No. Whenever you see inventory, you will write Caro pointer. No. Caro is what? Reporting requirement from auditor. What auditor has to report in respect of inventory held by the entity? Auditor has to report 2 aspects. Whether physical verification is performed at reasonable interval, if the company has been granted working capital in excess of 5 crore on security of current assets, whether statements of current assets filed by the company with the bankers are they matching with books of accounts. If not, auditor has to give details. That is what Caro reporting requirement. Here audit procedure they are asking. How to audit inventory to ensure that they are owned by the entity. It may be lying in the warehouse or it may be lying with third parties. That is what they are asking here. Next. SQC1 requires assumption of leadership responsibilities for quality within the firm. Are such leadership responsibilities required for audit engagements only? No. SQC is applicable. SQC has so many elements of quality control, leadership responsibilities, ethical requirements. engagement, performance, human resources, acceptance and continuation of client relationship, monitoring. Totally 6 elements were there. Getting it? Inside that, one of the element is leadership responsibility. Entire standard on quality control is applicable for not just audit, review, other assurance and related services. You see SQC heading. Quality control for firms that perform audit, review of historical financial information and other assurance and related services engagements. This is the heading of the standard. The standard SQC is applicable for all types. Here they are saying what? Audit engagements only. No. Leadership responsibilities required. No. They are applicable for all the engagements, audit, review, everything. Who assumes such leadership responsibilities within the firm? The firm's chief executive officer or the firm's partners, managing partners, or some firms might have a partner called quality control partner. He will assume. How it is important for audit quality? The firm leadership responsibility should demonstrate that the quality in audit is essential, paramount. Like that, there is a content. You need to write that content. So that is what given below. You see, leadership responsibilities of all engagements not for audit. These policies should require the firm's CEO or the managing partner to assume ultimate responsibility for the firm. The example set by the leadership encourages inner culture that recognizes high quality. Further, persons assigned with operational responsibilities for quality control system should have sufficient and appropriate experience, ability and necessary. In the firm, no, whoever is given this quality control policies and procedures responsibility, they must have necessary ability, necessary authority to assume that responsibility. You know, in exam, no, like here I will tell you how marking will be done. Here marking will be done 1 mark, like probably 1 or 2 marks for this point. Probably I can say like they'll give you itemized. So all the engagements not for 1 mark for this. The CEO and officer shall assume ultimate responsibility, 1 mark for this. Now they are asking this question also. What are they asking? Who assumes that how it is important for audit quality? That is another question. The example set by leadership encourages an inner culture that recognizes high quality. Further, persons assigned with operator responsibility should have sufficient. So leadership responsibility 1 mark, operation responsibility 1 mark. 4 marks will be allocated like this. I don't know whether this is a 4 marks question or not. 4 marks only. So like this. Now students, no, they write any 1 or 2 points only, they get 2 marks. They write some 3-4 points and all, they write, but they don't belong to this point. You're getting it. Many students write correct answer, but they don't get the marks because the answer is correct not for the question asked. You're getting it. So they write correct answer, but not for the question which is asked. That's it. You're clear? Next. Just 2 minutes. We'll take a small break. Okay. So TAX is contemplating use of negative confirmation request as a sole substantive audit procedure to verify certain accounts payable balances reflected in financials of a company. Which conditions need to be met to use negative confirmation as stated above? Can we use negative confirmation as a sole substantive procedure? Yes, unless the following conditions all are present. All the conditions below given are should be present. The volume, the balances are high in volume, immaterial. Yes or no? They are immaterial. 2. The exception rate expected is low, and the risk assessed is low, and the chances of non-response from third party is less. Like auditor is not aware of any circumstances, the third party will disregard the confirmation request. If all these 4 conditions are present, negative confirmation request can be used as a sole substantive procedure. Additionally, TAX is of the view that negative confirmation provides same level of evidence as in case. No, negative confirmation request provide less persuasive evidence than positive confirmation request, because non-response from negative non-response to a negative confirmation request does not explicitly indicate that third party is agreeing. There is a risk, yes or no? Do you agree with the viewpoint? Provide reasons. I told the reasons. Entire answer is over. Yes or no? Now you see, for all the conditions that you're writing, no, further 3 marks will be there. And the second point, do you agree with this viewpoint? Is of the view that same level of assurance, it provides 2 marks, or maybe this is 1, this is 4, because 4 conditions are there for negative. So for 4 of them, 1 mark, and for this 1 mark. what student will do, you know, he'll write 2 points relating this and he'll ignore this point full totally, and he'll get exactly 2 out of 2. What he wrote only 2 marks portion, he get 2, and he'll come out and complain that institute will not put full marks in audit. First you should write full answer, then you will get full marks. Next, CAH has been offered audit of financial statements of society engaged in promoting social causes such as setting up drug de-addiction centers for misguided youth and rehabilitating such young people by helping them to find avenues of gainful employment. Okay, there's like social causes, some trust was established. However, CAH failed to send engagement letter to the society governing body and proceeded to conduct the audit. In the absence of letter, the governing body is of the view that purpose of audit is to provide absolute assurance against probable errors and frauds in the financials. Does it constitute violation of fundamental principles of professional ethics? Yes. You have to. It is your duty to send engagement letter. You failed to comply with the professional ethics. You're not competent because you didn't understand this. Yes or no? What are the professional ethics fundamental principles? Integrity, objectivity, confidentiality, professional competence and due care, and professional behavior. It is not professional on part of the auditor not to send engagement letter. It either comes under professional behavior part or professional competence and due care part. I can either say auditor is negligent here, or he is intentionally would have not sent the engagement letter. If it is intentionally done, it's professional behavior. If it is unintentionally done, ignorance, competence. You're getting it. We'll look at the reason. By not following requirement of 210, H is not acting ethically. He has violated principles of competence and due care. I told you, right? They assume that it is unintentionally done. If it is intentionally done, professional behavior. This principle requires an accountant to attain and maintain knowledge and skill at level required to ensure that client or employee receives competent professional service based on current technical professional standard and relevant legislation and act diligently in accordance with the applicable technical professional standard. Understood? Hey, this is there in our book completely. Maintaining competence requires awareness of current technical professional standard. Non-sending engagement letter shows lack of awareness on the part of the auditor. Therefore, he has violated said fundamental principle of professional ethics. You need to figure out exactly which element is not complied. Clear? Next. While verifying cash and cash equivalents of a company, CAD engagement partner is very particular that bank reconciliation statement prepared by the management in respect of bank account maintained by the company is proper to rule out misstatements in cash and cash equivalents reflected in the financials of the company. Like while verifying cash and cash equivalents, no, he is very particular about the BRS prepared by the management in respect of bank accounts maintained by the company, which is proper to rule out misstatements. So BRS is generally required to rule out the misstatement, to avoid misstatements. The company does not use net banking and prefers to issue checks to its creditors and receive substantial payments locally through checks. So they're not using net banking to have an instant settlement. So checks are issued manually, checks are collected manually, where the moment you receive check, you account in books of accounts. The moment you issue the check, you account in books of accounts. But ultimate settlement might be on a different date, because of which there should be a reconciliation between bank book as per books, bank book as per bank account. Yes, or banks. Which aspects need to be taken care and verified in BRS? BRS, what points will you verify? Checks issued but not cleared. Checks deposited but not cleared. Bank charges, commission, all that. Since internet banking is not used, there will be so many transactions that are there in the bank statement but are not aware of the entity. It's a simple question. It's actually items of financial statements questions. Cash and cash equivalents, inside that BRS discussion is there. What points to be checked? That clear? Next. C.S. Sumit has been appointed as Stat Auditor of Core Limited. List out some matters that he may consider in determining whether a deficiency or combination of deficiency constitute significant deficiency. It is actually deficiency or significant deficiency is a matter of ultimate judgment. It depends upon nature and amount of the financial statements the exposed to. The deficiency is exposing to what, and how far this deficiency has an impact on other aspects of internal control. Like that, some points were there, 5 points approximately were there. I have explained it in 265 very clearly. There I explained that this itself can be asked as a question, getting it. And I covered this as a part of at the risk assessment chapter. I covered this at risk assessment chapter. At the last chapter I covered 265, 450, SQC, 220, 330. 5 standards approximately I covered in risk assessment chapter. Of course, risk assessment chapter itself is 315 standard. And of course, 320 is also covered there. In risk assessment topic, I covered 315, 320, 330, 265, 450, SQC 220. All that I covered inside that folder only. If you observe, or maybe quality control I have covered in separate folder. I'm not sure exactly. You just see. Okay. Don't miss the topic. Which one? Quality control topic, don't miss. Risk assessment also, just watch once thoroughly and leave it. Whether you revise it later or not, it's your choice. But watch once, because MCQs and all, there's a possibility. While conducting the audit of Xena Limited, CA is trying to obtain understanding of different components of internal control of the company. Such an understanding is necessary and is required to be documented in accordance with the standards on auditing. In this context, how he shall obtain understanding of risk assessment process of the company, and how is this understanding is important. How to obtain risk assessment process, inquiry, observation, all that points. CAE shall obtain understanding of the entity, whether entity has a process for identifying business risk, estimating significance, assessing likelihood, describing. It would assess the audit in identifying risk. Risk can arise from due to change in technology, all that. This is straight away risk assessment chapter question. You go through it. Okay. 72. Who according to 72 section is disqualified from being appointed as auditor of multi-state? This is a straight question. Disqualification of multi-state societies auditor. I'm not covering it. It's a straight question. Indebtedness more than 1,000. Officer of the society. Employee of the society. An auditor who has a relatives in the society. That and all we should not appoint. Disqualifications of multi-state corporate societies auditor. Straight question. National Bank has advanced a cash credit facility of 25 lakh to Sun Industries. 25 lakh cash credit facility is given. Following is the extract of accounts of Sun Industries reflecting in core banking solutions of the bank. Sun Industries ledger account they showed. From December 1st to March 31st. Okay. First December, 2 transfer, 45,000. 2 transfer means what? Customer account, customer withdrawn money. So that's why bank will debit. When customer withdraw the loan, no. For bank it's an asset. So they debit. Correct? 24 lakh 75 outstanding. Again, the customer paid 1 lakh. When he paid 31st December, he paid 23 lakh 75. Now again he withdrawn in December 31st some amounts. Up to 31st March he withdrawn so much interest all put together. This is the outstanding balance right now. Now you tell me a cash credit facility or overdraft. It becomes an out of order when the outstanding balance is in excess of the limit sanctioned. It is less than that. 2. It is less than the outstanding balance is less than, but there are continuously no credits for more than 90 days. 31st December to 31st March is more than 90 days. Where are the credits? It's treated as what? Out of order. Out of order means what? NPA. Okay. Drawing power during the above period is consistent. Okay, sanction limit is 25 lakhs. Drawing power is also 25 lakhs. And outstanding is less than 25. Drawing power and sanction limit. But the point is, there are no credits. The account was classified as standard asset as on 31st December in the books of bank. The security charged with the bank remains intact. 31st December it may be standard asset. That's okay. Yes or no? But for 31st March it is NPA. Getting it? The security charged with the bank remains intact throughout the period. Comment the asset classification of the above account as on 31st March in the books of accounts. As on 31st March, since continuously more than 90 days, no credits were there. Therefore, it is treated as NPA. Out of order, all the 3 circumstances have to write and classify. See, again, they asked this question. MCQ they asked already. Here also they asked. Or no? While performing audit of financials of a listed company, statutory, now remember in this question, no, out of order 3 circumstances are there. For 3 marks will be there. And given case scenario, analysis and conclusion. Like you need to analyze the situation. There are no credits after 31st March to 31st March. Last time the credit was there in the 31st December. Therefore, for more than 90 days, no credits were there in the cash credit facility, and hence the account is treated as out of order, and accordingly it must be classified as an NPA. Therefore, the action of the bank classifying it as a standard asset. Comment on the asset classification. Okay, I think here it's actually 31st March. Probably the question is here 31st March. So the classification by the bank on 31st March as standard asset is improper. You should give entire this answer. Then only 2 out of 2 you will get. Some students very good at writing provision, but analysis conclusion they'll completely destroy. They don't get. So 5 out of 5 you will get only when you write all these components of the answer. Next. While performing audit, see, I'm telling you what to write and how to write, where student generally loses. Because you should remember all these points. You should observe all these points. You should observe the mistakes what they do. So if you observe, you will not repeat. While performing audit of financials of listed entities, stat auditor need to maintain an attitude of skepticism for related party information. State examples of records or documents that may provide information about related party relationships, income tax returns, share register, investment register, enquiries to the management, meetings of the management, latest interim financial statements. Like that, some examples were there, almost 10 points. Any 4 or 5 points you write enough. Any 6 points have to write. The last question in 550 standard. In our book, last question in 550 standard. Sanjana is of the view that there exist some disadvantages in the use of program, but most of these can be removed by following some steps. Do you agree with her perspective? Comment. Yes. Precautions were there. Audit program question. Disadvantages. How to overcome these disadvantages? Precautions is there. You need to just observe that. You straight question, right answer. Bots is using manufacturing, is a manufacturing entity having material PPE, means significant PPE in its financials. The auditors of the entity wants to verify that PPE have been valued properly as per GAAP and practices, GAAP practices. Comment on the significance of such verifications. Suggest few procedures. How to verify valuation of, how to verify what is the audit procedure you perform to ensure that value of the PP is correctly done. We will see whether depreciation is calculated as per the prevailing rates or not. Depreciation. We will see if the company has done revaluation, whether it is done by registered value or not. We will obtain a list of all the fixed assets, whether the capitalization value is correct or not. These are the suggested. Why we need to do this? Like they're asking, comment on significance of such verification. Since PP is material to the financial statements, if you do not verify, it leads to a material misstatement. Possibility of material misstatement will be there, which alters the financial position and performance of the company. That's why it must be verified by the auditor. And what to be verified in this given question? Valuation. Please give the points. That's it. Clear? MTP1 is over. MTP1 is over. So, yes. MTP2, same. I already gave introduction to the paper setting pattern. In MTP1, the same pattern will apply even for MTP2, even for your final exam. Now, let's look at the case scenario 1. Yeah, I was just checking, is this MTP2? MTP2 only. Case scenario 1, DLP and Associates, a firm of chartered accountants, are in the mid of conducting audit of Twist and Spin Limited. The company is in business since last 15 years and have appointed DPL Associates as their auditors for the first time for a term of 5 years beginning from 23-24. 5 years. Non-government companies, the auditors were generally appointed for at a time 5 years. Whereas for government companies, C&AG will appoint on a yearly basis. So auditors are not appointed at a time. Okay. Next. While identifying and assessing risk of MMS at assertion level, the engagement team had assessed risk of MMS for revenues and trade receivables to be high. The team is considering to send negative confirmation request as a sole procedure to some business entities representing trade receivables. Okay, they are doing first, okay, they are doing risk assessment. Engagement team has assessed risk of MMS for receivables and trade receivable, revenue and trade receivable is high. The team is considering to send negative confirmation as a sole substantive to some business entities representing trade receivables appearing in financials. Already when the risk assessed is high, negative confirmation cannot be used. The company had made sales to these business entities in January 2024. Okay, sales were made in January. Such business entities are few and have quite large balances as on 31st March 2024. Okay. However, team members are not on the same page regarding sending confirmation, negative request to them, which is actually correct. See, there are large outstanding balance on 31st March. Balance is very large. Risk is high. Negative confirmation request should not be sent, right? Negative confirmation can be sent when the balance is low, large volume of homogeneous items, and risk is low, exception rate is low, non-response chance is low. Then only we can use. Besides considering sending of confirmation request, engagement team has planned certain procedures pertaining to trade receivables. What are they? These procedures include verification of invoices issued during 7 days of the last 7 days of the year to verify goods have been dispatched by the company. Yes, this is cut off, which is important for ensuring completeness of transactions, whether accounted or not. Selection of few invoices from aging report of the month of March for verification of correctness of billed amounts to correct customers and on correct dates. Okay, so they are taking some bills related to March month. The selection of few invoices from aging report of March month for verification of correctness of the billed amount, correct customer, correct dates. Whether the based on the bill, is it accounted, is it recorded in the correct account, ledger account? Is it recorded in the correct date? Is it recorded at the correct amount? So it is concerned about valuation. It is concerned about what? Valuation. Preparation of schedule of movement of bad debts. Preparation of schedule of movement of bad debts. Like, why do we check movement of bad debts? Why we check bad debt movement? Like, So you have to check movement in bad debt to know whether it is really a bad debt. 1. 2. Whether it is treated as bad debt without even recording it. So bad debt will give me evaluation of bad debts will let me identify some frauds, if at all there. 2, it also helps me to identify whether related sale is recorded. Related sale is recorded correctly or not. Generally, you can't record a bad debt without related sale. If there is no debtor in the asset side, how come you write off bad debt? Generally, that is not possible. But olden days, it is possible. There is a possibility that they record bad debt, but much before recording actual sale. And review the process of providing discounts to ensure that it is in accordance with the company policy. Okay, these are the 4 procedures which they want to verify along with external confirmation to debtors. Another junior team member observed that share option outstanding account reflected in financials of the company. He started searching classification requirement of Schedule 3 of Companies Act. Okay? So share option outstanding account is there. It must be classified under reserves and surplus. Yes or no? I'm not sure. That you should only be perfected. ESOP, share option outstanding account. In this regard, the engagement team wants to ensure that only the inventories held by the company have been recorded in financials, but do not include inventories belonging to third parties. They want to ensure only company inventory is recorded, but not third party. They are keen to verify completeness assertion for inventories. Okay, they want to verify whether inventory is completely accounted or not. The team has planned the following procedure in that respect. So in order to verify whether all the inventory is recorded or not, they want to verify the following. They want to verify that by the following process. What? Comparison of inventory turnover ratio of current period with the previous period. We generally do this. Vertical analysis of current period with the previous year inventory. Comparison of budget versus actual. Performing purchase and sales cutoff. Performing purchase and sales cutoff. They are doing all these procedures in order to verify inventory, whether the inventory is completely accounted or not. So, like comparing budget. Suppose if at all in budget inventory value, if the closing inventory value is 10 crore, whereas in the actual value 8 crore is there, we immediately get it out. Why there is a difference? So we verify. So indirectly comparing actual versus budget, no, it gives us some evidence regarding completeness. Performing purchase and sales cutoff. This will give me regarding completeness of inventory accounting, because if I do apply purchase cutoff and sales cutoff, I will get to know whether purchase and sale are recorded in the right period. Accordingly, I will know whether inventory is recorded rightly or not. This will also give me completeness. Vertical analysis of current period inventory with the previous period inventory. What is vertical analysis? Nothing but raw material to total inventory, how much? Finished good to total inventory, how much? Work in progress to total inventory, how much? Total inventory means raw material, work in progress plus finished goods. This analysis is called vertical analysis. Current year, what is the composition of raw material to total, work in progress to total, finished goods to total? Last year, what is the composition exactly? If there is a extreme variation, why there is a variation? Is there any inventory that is not accounted? That is also completeness assertion. Comparison of inventory turnover ratio of current period with the previous period. Actually, this will also help me. This will also help me in completeness assertion. Comparison of inventory turnover ratio. What is inventory turnover ratio? Right now, how much is the inventory? Turnover is how much? Inventory by turnover, how much? This year. last year how much it is. If there is a huge variation, we understand why there is a huge variation. Are they over recorded or under recorded? Completeness assertion also will be checked through this particular method. Fine, we don't know what is the question, we are just analyzing the question, analyzing the case study. Fine. During the course of audit, or a team member concluded that company has followed a particular accounting policy for revenue recognition during the year, which is in accordance with accounting standard and applicable framework, but it was not consistently applied in the preceding year, having an impact on the opening balance of trade receivables of the current period. Accounting policy is not consistently followed. Last year it was followed differently, this year it was different, so it has an effect on opening balances. R is confused regarding the possible implications on audit report on this issue. So he is confused. What are the possible implications? Okay. Based on the above, answer the following. The engagement team members are not able to take decision on sending NCR to some entities described in the case scenario. Which of the following statement is correct? It would be appropriate for engagement to send NCR? No. It would be inappropriate for the engagement team to NCR to these. It is inappropriate. That we know. Sending negative depends upon auditor's judgment and standard do not spell out any. That's wrong. Standard is talking about when to send NCR also. Business entities are more likely to respond in case of disagreement. Therefore, sending NCR always provides better quality. No. B is the right answer. Correct? It is inappropriate in this case. Why? What are the reasons? Risk assessed with respect to trade receivable is high, and moreover it is a large outstanding balance. Definitely two conditions are failed. So we should not send NCR. Next. Which of the planned audit procedure pertaining to trade receivables in the scenario are not related to verification of completeness assertion? Trade receivables, no, they just did these four. Whether invoices are issued in the last 7 days, are they accounted? Of course, completeness. Selection of invoices from aging report and see whether customer accounts are rightly. This actually deals with valuation. This actually deals with valuation, not completeness. Preparation of schedule of movement of bad debt. This also actually helps in completeness. Review process of providing discounts to ensure that it is in accordance with discount is again concerned with valuation. It is not concerned with this one. So answer is 2 and 4. But they gave a wrong answer. Technically the answer is 2 and 4. So like what they gave here, 2 and 4 option itself is not there. Probably they gave an answer called 2 only. Only 2 is not relevant or something. What they gave? 2 and 3 I think. 2 and 3 or 2 and 4. 1 and 3 I think is this. Like what is the answer? We'll see just once. 2C. Okay. They gave 3 only. Movement in bad debt is not relevant. What is this? Not related to verification. Correct or no? This is MTP2. Yeah, MTP2. This is second MCQ. No? They said 3 only is not correct. But remember, preparation of schedule of movement in bad debts we definitely consider. This is related to completeness assertion. We have to consider bad debts also to check whether any sorry, the question is one minute. The question is what? Not related to completeness. The question is what? Not related to completeness. In our answer, what are the procedures not related to completeness? We already figured out 2 and 4. These are not related to completeness. Yes or no? But they said 3 is not related to completeness, which is wrong. The answer is wrong. The actual answer is 2 and 4. Both of them are not related to completeness. But movement of bad debts, we check. Whether movement of bad debt, whether bad debt is generally, no. Olden days, there is a possibility that bad debt accounting is not possible without sales accounting. But as per the latest, considering latest logics, movement in bad debt is obviously, movement in bad debts, okay, I can say movement in bad debt is also not a complete assessment based on the latest accounting. How? Today bad debt will not come without recording sale. So when bad debt is there, obviously sale would have been there. So trade receivable, movement in bad debt is not an assertion. Movement in bad debt is not a procedure to decide completeness of trade receivable, because the moment you are verifying bad debt means it's already accounted. The moment it's already accounted means already, it is completeness assertion related. Getting it? Not related to completeness assertion means obviously this also will not come, but they gave this as the answer. Not related to completeness means they gave third, which is actually not correct. The answer is 2 and 4. Technically, according to me, the answer is 2 and 4. Discounts is something valuation related. Second point is no, whether it is billed to right customer, right amount. That is also valuation related. 2 and 4 is the right answer technically. Third point, of course, we will consider in completeness. First point, of course, we will consider in completeness. So the judgment is wrong. Probably the person who said the question, this question, no, his judgment is wrong. Movement in bad debts we will consider for sure. Now also we will consider technically, because logically there is a possibility that you may record bad debt but not recording sale. There is a possibility. You're getting the point? You know, bad debts will not come in cash sales. Sorry, cash basis of accounting. If books of accounts are maintained on cash basis, sale is recorded not when the goods are delivered, but when cash is actually received. So in that case, bad debt will it come? I may not record sale itself. If at all I didn't collect the money, I will not record the sale itself. That's how bad debts will be taken care in case of cash system of accounting. Yes, Chitra humming. Next. Guide team member yes. Guide team member yes by selecting the correct option with respect to share option outstanding. This schedule 3 question. I think it should be classified under reserves and surplus. It should be classified separately under reserves and surplus. I think it is option C. I'm not extremely good at schedule 3. It's an accounting question. Getting it? So I think option C. I'm not sure. Okay. Which of the planned audit procedure in relation to inventories are not in the nature of analytical procedure? Not in the nature of analytical. Just a minute. Performing sales and cutoff test. This is not analytical procedure. This is not analytical. Analytical procedure means comparing or analysis or comparison. Some comparison or some analysis will be there. Test cutoff is not analytical. So 4 only. 4 is not analytical procedure. 4 only is there. Getting it? D. So here, by the way, here it is C. Whereas here it is, they said C only, 3 only, but I feel it is 2 and 4. Both are not related to completeness assertion. Both are not. They both are related to valuation. Bad debts verification will be related to completeness assertion. But again, today, bad debt can be recorded only when the sale is recorded. So whether sales are completely recorded or not, bad debt movement I may not look into, because no, bad debt will come only into picture when there is a sale. So on that logic, 3 is also right. Because 3 is not movement in bad debt, no. That we generally don't do for completeness based on this logic. What is the logic? A bad debt will come into picture only when the sale is recorded. Sale is recorded means obviously trade receivable is recorded. Obviously. If I have an assurance, if I am verifying so and so bad debt, which gives me an assurance that sale is recorded, trade receivable is recorded, why will I verify to ensure whether sale is recorded? Because the moment bad debt is there itself means trade receivable sale is recorded. So that is not a right procedure to verify completeness of trade receivable. So on that logic, this is also right. But remaining 2 more points were the 2 and 4. They are completely dealing with valuation assertion. They are completely dealing with the valuation assertion. If that logic, we have to go by that logic, 2, 3, 4. All the 3 are not related to completeness. Only 7 days cutoff they do right. That alone is related to completeness in the options given by them. 2 and 4 also not related to completeness. Correct, Nina? Which of the procedures related to trade receivables are not related to verification of completeness assertion? The answer is 2, 3, 4. All the 3, technically speaking. Assuming the company is following electronic accounting, where a bad debt will be recorded only when the sale is recorded. A sale is recorded means trade receivable is recorded. Then see, bad debt means only trade receivable is recorded, bad debt will come. Can I verify bad debt to see whether sale is recorded, trade receivable is recorded? No. Completeness means what? Whether all the trade receivables are recorded. For that, will I verify bad debts register? No. On that logic, 3 is not dealing with the completeness. Not only 3, even 2 and 4. 2 is what? Whether they selected March month aging report and checked whether the sales made in the March month are they accounted in the correct customer account at correct amount and correct date. So that is also not related to completeness. That is actually dealing with valuation, occurrence. There are 2 assertions. Then finally, a 4th point is there. What is that fourth one which they are testing? Review of discounts Whether the company is providing discounts. In discounts, what we check, whether it is authorized by the person or not. Management authorized discount or not. Whether the discount is accounted properly or not. There we see measurement and valuation. This is actually what? Measurement and valuation. That's it. So 2, 3, 4 should be the answer, but they only gave 3. 2 and 4 they have not covered, which is actually not right. Next. Here 4 only. Yeah, here it is right. Next, case scenario 2. Case scenario 2. CAJ is nearing completion of audit of Cheap Cost Private Limited, a manufacturing company for the year 23-24. The draft financials of the company. The draft financials of the company shows a PBT of 5 crore. Materiality for financial statements is determined at 5% of PBT. Means what? 25 lakhs. Correct? 5 crore multiplied by 5%. At the end of June 2024, remember you're doing audit of 23-24. June 2024 means you are at the conclusion of the audit. He is considering following issues flagged during the course of audit which remains uncorrected. Like some issues, auditor found some issues. What are they? A fire took place. A fire took place in one of the premises of the company on 1st May, resulting in damages to all inventories lying there amounting to 1 crore. Okay, when 1st May, conditions exist on 1st May. It's a non-adjusting event which requires only a disclosure. Why? Because the amount is 1 crore. Profit is just 5 crore, 1 crore. Materiality is just 25 lakhs. Since the loss is more than material, it's a material loss, it requires disclosure. The inventories of the affected premises are insured with the Quick Bima Limited for 50 lakhs. Okay, underinsured. And company has lodged a claim with it which is still yet to be settled. Okay, settlement is not yet there. Right now, prima facie loss is 1 crore. The company has debited 10 lakhs under machinery account, whereas expenditure relates to normal wear and tear of high-speed automated machinery. Okay, the amount was wrongly capitalized under machinery account. Okay, amount is wrongly capitalized. Wrong capitalization, 10 lakhs worth of mistake is there. Fine, we'll see. Individual mistake less than materiality. Single mistake is less than materiality. But we won't see just single mistake. We see combination. We'll see is there any other mistake also. The company has not properly accounted for necessary elements of cost in arriving at the work in progress. Okay, cost, work in progress valuation went wrong. Further, estimates regarding various stages of production have not been made properly. All the factors resulted in overstatement of inventory by 20 lakh. Total mistake is 30 lakh. It's more than materiality. Auditor has to modify his opinion. Yes or no? Because more than material level, the total of mistakes. Fine. No other issues except as stated above merit attention. Means there are no other issues in the audit. Besides, written representation has also been obtained on matters concerning management responsibilities regarding fulfillment of responsibilities for preparation and providing access to all information to the auditor. However, written representation provided to the begins with the following manner. That this representation is provided in connection with your audit of financials of Cheap Cost Limited for the year ended 31st March for the purpose of expressing opinion as to whether financials give true and fair view in accordance with the applicable standards in India. We confirm that to the best of our knowledge and belief, having made such inquiries as we consider necessary for the purpose of appropriately informing ourselves dash written representation started with a qualifying language called to the best of our knowledge and belief. Auditor can accept it. No problem. So this is the case study. Understood? Got grip on the case? Now look at the questions. Based on the above, answer the following questions. Yes. Which of the following statement is most appropriate regarding fire accident? Fire accident 50 lakhs, 1 crore le, and the condition present on after the balance sheet date. No condition on balance sheet date. So tell me, the auditor should ask management to adjust. No, it's a non-adjusting event. The auditor should ask management to adjust. No. The auditor should ask management to disclose it in the notes. Yes. No responsibility. Wrong. So the answer is C. Next. No, in the question they didn't ask. No. It might be there. Going concern. I'll tell you. See here the question is, will this lead to going concern effect? Already company has a 5 crore profit. The loss is 1 crore only. How come it affect going concern? But going concern is not about materiality alone. One of the operational indicator in going concern is what? Losses. Here company has a 5 crore profit. 1 crore, okay, let it be loss. So what? It won't affect, still profit only, no? Even if 1 crore loss is there through fire accident, still profit is there, na? When we say going concern is affected, when we are having net losses, when we are defaulting people, then going concern is affected. Otherwise, going concern is not affected. If the inventory value is somewhere like 10 crore, 15 crore, that much loss is there where company cannot bear the loss. That is when going concern is said to be affected. But anyhow, here MCQ, going concern point is not asked. But then since you asked the relevance, I just explained. Going concern here it is not affected. Why? Loss is 1 crore only, whereas profit already is 5 crore. Even after setting up this loss, still company has 4 crore profit. How come I can say going concern affected with this much profit? Company can successfully continue. Yes or no? That too insured. That too insurance is there for 50 lakhs. Next. Identify the correct option regarding materiality of uncorrected misstatement relating to wrong capitalization under machinery and overstatement. What is the materiality? It's material. Both put together is material. Exceeding the materiality set for financials. Yes or no? The uncorrected misstatements are not material. Wrong. The uncorrected misstatements are material in the context of audit as a whole, and their effect on the opinion should be considered. Yes. The uncorrected misstatements are not material. The uncorrected misstatements are material in the context as a whole, and auditor should correct this. We will not correct this. We will consider them in forming our opinion. So the option is sorry, B. I'm just testing you. That's it. So the answer is option B. Correct. No, brother. See, I'm testing you technically. Next. The auditor has performed certain audit procedures described in case scenario relating to inventories of work in progress. Such procedures are related to verification of dash, like what assertion? So, valuation. The auditor has not, I mean, the company has not recorded. These are the issues which he found. Further estimates regarding various stages of production have not been made properly. All these factors resulted in overstatement. So, what exactly auditor considered? I'm just looking for, is there any other procedure which they listed out, which I forgot actually? No, nothing. So valuation related point only, they spoke related to work in progress. Which of the following statement is correct in respect of manner of providing representation? Which of the following statement is correct in relation to manner of representation provided? What is the manner of representation provided by the management? It's correct, no? It's proper. The extract of representation provided in case scenario is proper. Yes, correct. The use of having made such inquiries, no, there is no such restriction. The management can say, obviously management will inquire others within the entity sometimes before making representation, like actuaries, engineers, employees who are dealing with respective departments. Yes or no, that we have a question. The use of words to the best of knowledge is not. No, management can use qualifying language. Auditor will accept it. The use of both or not. No, that's wrong. So the answer is A. Case scenario 3. MPM and Associates, a firm of chartered accountants, have received offer letter from bank for carrying out statutory audit of Chandigarh branch for the year 23-24. The offer letter requests the firm to give undertaking in writing that the firm is not disqualified under 141 subsection 3 clause D subclause 2, which is dealing with indebtedness. Auditor has to give a declaration of indebtedness, that he is not indebted for more than 5 lakh. That's mandatory under Companies Act, which is the bank is asking, which is correct. Such provision relates to disqualification of person as an auditor if he or relative is indebted to the company subject to certain prescribed. They gave the provision also, if you didn't recollect, this 141. Before accepting the said audit, the firm checks out whether it complies with the law requirement. Obviously, while accepting and continuation of client relationship, we need to check whether can be relevant ethical requirements, integrity of the client, competence of the team, all that. However, there is a difference of opinion among firm personnel whether such an undertaking can be given in case of bank. Okay, fine. So such a kind of declaration of indebtedness, bank is asking undertaking, right? Letter, right? So the firm is discussing, the among team, should we give the declaration on it? Is it necessary or not? They're discussing. It is necessary. It is necessary. The offer letter also contains following declaration to be signed by auditor in case they choose to accept. Like offer letter says, auditors have to sign one more declaration if at all they're ready to accept. What declaration? How the declaration is? It is read as below. The auditors have to sign this declaration. What? We declare that we will not communicate, allow to be communicated to any person not legally entitled to any information relating to affairs of PST bank or to the affairs of any person dealing with the bank, nor will allow any person to inspect or have access to any books, documents belonging to or in possession of the bank relating to business of the banking. Confidentiality. This is a declaration of what? Confidentiality. Like saying that we will not allow anybody to access these records and documents. Nothing but it's actually what? Confidentiality declaration. A bank, when they are proposing you to appoint as an auditor, they may ask you declaration to sign declaration of confidentiality, which is permitted. The audit firm has also received a document kit provided by central statutory auditor, means principal auditor. Main bank auditor is he gave a kit. It relates to scope of audit, areas of special consideration while performing the audit, requiring the audit firm to confirm certain matters like adherence to RBI circulars for income recognition, asset classification, provisioning and adequacy of checking of books of accounts based on sample to them by way of letter. Principal audit procedure. Principal auditor can send to other auditor. We have in an audit report. Principal auditor can request other auditor to confirm compliance with certain procedures required by law or regulation. Principal auditor can instruct other auditors what are the areas which require special consideration. Principal auditor may describe other auditor what is the scope of audit, all that. Yes. The document kit received also requires the other auditors. MPM in our company, in this case scenario, MPM is actually other auditor. To consider adverse comments made by stock auditors of borrowers enjoying cash credit in their reports for the purpose of reporting. Yes, principal auditor told that you should consider adverse comments made by stock auditors, all that, which is actually correct. It also contains specific instruction to check foreign letter of credit issued during the year in compliance with the sanction terms of respect to borrowers and to verify income recognized in respect of FLC, foreign letter of credit. Foreign letter of credit is like a guarantee given by Indian bank who is importing, Indian bank where the bank's customer is importing goods from outside India. This FLC, they give, this bank will give letter of credit to foreign bank whose customer is exporting goods. In the event our customer do not pay the money, bank will pay. That's the kind of guarantee is called as letter of credit. Now the bank which is issuing, in India, that's called issuing bank. The bank which is receiving foreign bank letter of credit, it's called beneficiary bank. What is it called as? Beneficiary bank. Fine. Which of the following statement is likely to be most appropriate regarding undertaking in accordance with Companies Act? The auditor should give this undertaking. What undertaking? That they need to declare that they are not indebted to the company for an amount exceeding 5 lakh. The referred provision mainly addresses self-interest threat to independence of the auditor. The audit firm can give such an undertaking after verifying it complies with the requirement. Yes, the answer is correct. Having loans with the bank, having loans with the client is a self-interest threat. To avoid that, you should not have a loans beyond a particular limit, and you should give a declaration that your indebtedness is, you have complied with the relevant provisions of Companies Act. That is correct. Let's see other. The referred provision mainly address self-review, that wrong. The referred provision mainly address self-review, self-interest threat. However, audit firm cannot give, wrong. The referred provision mainly address self-review, wrong. So the answer is A. Yes or no? A. Understood? The declaration relating to non-communication of information to FIRs is governing which principle of ethics? Yes, next. MPM and associates are required to report on adverse comments made by stock auditors of borrowers of the branch enjoying credit facilities. Which of the following statement is most appropriate in this regard? We'll see. Stock auditors make comments in the reports on valuation of security and calculation of drawing power. Generally, like here, what is this? The principal auditor is asking branch auditor, please consider adverse comments made by stock auditors of borrowers of the branch who are enjoying credit facilities from the branch. Like branch is having customers who are borrowing, their stock audit is conducted by stock auditor. Inside that adverse comment is there. Which of the following statement is most appropriate? They're asking. Like, let us see what statement they're saying. Stock auditors make comments in their reports on valuation of security and calculation of drawing power. Absolutely correct. Stock auditors generally in the report, what they mention, they talk about valuation of security and drawing power availability. The stock auditors, why bank will do stock audit? Why bank will appoint stock auditors? Generally, if the funded exposure is more than 5 crore, if the funded exposure is more than 5 crore, stock audit is compulsory. Some external auditor will come and verify whether really the current assets stock, these values more than 5 crore or not, because no customer has already withdrawn more than 5 crore. So valuation of security they will check. Resultantly, drawing power will be decided. So stock auditors are generally concerned with these two aspects primarily in case of stock audit. We'll see. Stock auditors make comments in their valuation of security only. However, no comments are made on calculation of drawing power. No, stock auditors will generally talk about drawing power as well. Stock auditor make comments in the report on valuation of security, documentation made by the bank in respect of credit facility, leakage of revenue and calculation. Why stock auditor is concerned about documentation by the bank generally? It is not his primary duty. His primary duty is about valuation of security. Stock audit, audit of inventory. Why we are doing audit of inventory? Customer said 7 crore worth of inventory is there in the godown. Based on that 5 crore he withdrawn. Really 7 crore worth of inventory there in the godown or not? I will come and do valuation. I will do existence, condition, valuation I will check. Are you getting it? Resultant drawing power is decided. I may check documentation held by the bank also later on, but that is not the primary objective. That is not the primary objective. Stock auditors make comments in the reports on calculation of drawing power. No. We talk about value of security and drawing power, because drawing power is dependent directly upon valuation of security. So the answer is A. I hope you understood why remaining 3 are not. Understood? Keeping in view matter of foreign letter of credit described in the scenario, consider the following statements. Look at the statements, whether how many of them are right or wrong, you have to pick up. Foreign letter of credit is issued by branch is a non-funded loan. Yes. Advances are 2 types, funded, non-funded. Funded means where outflow will be there from the bank. In letter of credit, outflow will be there only when my customer default outflow will be there. Until then, it's a non-funded guarantee, non-funded advance, right? Yes, foreign letter of credit issued by bank is a non-funded. The statement is correct. Correct? Branch earns interest on FLC, which is credited in interest and account. No. Loan itself is not there. In FLC, I just give guarantee. For giving guarantee, I will collect charges for guarantee, not interest. So the statement is wrong. The statement is wrong. For giving letter of credit, no, I collect charges from my borrower. Obviously, letter of credit and all, nothing. The other bank will not invoke the guarantee. Letter of credit I'll give you so that the exporter will export the goods, because he has a guarantee from the bank that if the customer do not pay, bank will pay. Customer will pay. Now I give letter of credit to customer. No, for that what I will get? Some commission I will get. Some charges I will get. Not interest, because there is no loan itself. Interest will get, bank will get interest only when there is a funded loan. Funding should be there. The bank which receives a foreign letter of credit is known as beneficiary bank, which is actually correct. 1 and 3 both are correct. But here I think they gave the actual answer is 1 and 3 both are correct. I think they said only statement 1 is correct, but actually third one is also correct. Yeah. That's what letter of credit guarantees, all that. Banks will give guarantees, no? What else is there? Guarantee, commitment, bank. What else is there? Non-funded advance. Only that. Suppose, no, I gave an OD limit to the customer. Customer has not yet withdrawn. It's a non-funded advance right now. The moment customer withdrawn, it's a funded. Sorry? Of course, many times. In fact, there is a question on that. Give few examples of funded and non-funded. In our book, it is there. In the book, it is there very clearly. Somewhere around 12th or 11th question, it starts. What are the types of advances? We have a discussion on that. Funded advances, non-funded advances, we have a discussion. Based on nature of security, all that we have a discussion. Next. MCQs. Understood? Here, what answer they might have given is A, which is actually wrong. 1 and 3 both are correct. The foreign bank which is receiving letter of credit is no. That is called as beneficiary bank. That is true. That statement is true. CAY has started planning for audit of listed company. In this respect, he is considering all matters relating to acceptance of client, assessment of compliance with ethical requirements including independence, consideration regarding use of analytical procedure to be performed as risk assessment, to have a common understanding regarding terms of engagement with the management. Which of the following does not fall under preliminary engagement? Obviously analytical procedure. In this, no, why will I analyze? Why will I perform analytical while accepting the audit of a client? I will do analytical after accepting the client while doing risk assessment. Considering matters relating to acceptance of audit, assessing ethical requirements, common understanding terms, all this I will consider while accepting and continuing client relationship. Analytical I will not consider. Option C. A practicing CA is appointed by a company to perform certain agreed upon procedures related to trade payables. Agreed upon procedure related service is a related service. Such agreed upon procedure include verifying listing with the books of accounts, sending confirmation letters, and reporting factual discrepancy to the company. They just have to report discrepancies. That's it. You need not give opinion on accuracy of the data. Nothing. No opinion. No assurance is involved. Which of the statement is correct in this contest? The practicing CA shall perform work as per standards on related service and 220. No. 220 deals with audit of financials. Quality control in audit of financials. Whereas related service, this is correct. The practicing CA shall perform as per related service and SQC. Yes. SQC is applicable for all types of services. The answer is B. The practicing CA shall perform as per standards on auditing. No. The CA shall perform as per standards on assurance. No. B. The answer is B. Clear? Next. The audit of government expenditure is one of the major components of government audit. In this regard, what is meant by audit against rules and orders? Audit against rules and orders means what? That the expenditure is in conformity with principles of propriety. That's a propriety element audit. That there is a sanction, either special. This is audit of sanction. That there is a provisioning of funds. That's an audit of provisioning of funds. That the expenditure incurred to relevant provisions of statutory law in accordance with rules and regulations. This is called audit against rules and orders. So the answer is D. Government audit, if you study, you will understand that. In various types of entities chapter, we have government audit also. If you study that, you will get that. Clear? Next. So look at the answers. 15 D. 14 B. CAA, will see. C. It's actually, I don't know, A is alone. This though is actually B. So A is wrong answer. And A, yes, it is also correct. Yes or no? Then BAA. So here it is B and A and yes, A. Then here BBC. B and C, correct. Then DCCB. Yes, D, C. Here I told you C alone is not right, but of course, based on the given option, this is right. Based on the given option, this answer is right. Yes or no? Actually, 2 and 4 is also not a valuation, but based on given answer, this is more right. So C, right answer, and B, correct? Huh? That's it. With this MTP2, MCQs is also completed. I think we have finished within 40 minutes, which is correct, which is good. 54 minutes is what we have. So we finished much less than, with proper interpretation. Correct? Huh? Confident? Yes. We'll continue the next session. So let's begin MTP discussion 2, the descriptive portion. So CDE Private Limited, a manufacturing company, had made investments in shares of some blue chip companies. Additionally, it had temporarily deposited some of its extra funds in FDs with Schedule Bank. So it's a manufacturing company, made investments in some companies, and additionally it also had some extra funds, so they deposited in bank. Dividend from shares amounting to 1.8 lakh, which is net of TDS, whereas TDS amount is 20, which means gross amount is 2 lakhs. What is the income? 2 lakhs. And bank interest of 2.7, which is net of TDS, which means bank interest is 3 lakh. Dividend is 2 lakhs, bank interest is 3 lakhs. The income were credited in bank account of the company. They were credited in the bank account. Net amount only will be credited generally after TDS. During the year 23-24, it has sold some of the shares, resulting in net gain of 5 lakhs. Profit on sale of investments, that is also another income, correct? The company has shown above incomes under other income for consolidated amount of 9.5. So probably they showed how much? 2.7 plus 1.8, 4.5 plus 5 lakhs profit, totally 9.5 lakh. They showed under the P&L account, credit side, other income. Is this correct? No. They should recognize income on gross basis. They should recognize it on gross. How much they are supposed to recognize? 10 lakhs. 2 lakhs dividend income, interest 3 lakhs, and 5 lakhs is profit on sale of investments. In the statement of P&L, no other information is furnished in the financials put up for the audit. As the auditor of the company discussed whether the above situation constitute misstatement, obviously Also state few examples of misstatements. Examples of misstatements can be anything. Charging a capital expenditure to revenue or revenue to capital, classification, classifying, wrongly classifying. Right now this example is there, accounting income on a net basis rather than on the gross basis. These are all various examples of misstatements. So does this constitute misstatement? Yes, it is. Income has to be accounted on gross basis, that is inclusive of TDS. Yes or no? Whereas in the given case, the company has accounted excluding TDS, which is a misstatement. That's it. So look at the answer. Misstatement refers to, first write misstatement definition. We discussed in first chapter. It's a difference between amount classification, presentation, disclosure as per reported financial statement item and amount classification, presentation, disclosure that is required as per applicable financial reporting framework. So this is misstatement. So they gave a misstatement definition. In the given situation, there is a difference in amount to be recorded as well as in the disclosure of financial statement item that is required in accordance with framework. The framework says you have to recognize on a gross basis. The company should have recorded gross amount of dividend, interest like 2 and 3 respectively. Therefore, amounts recorded under other head should have been 10 lakhs. Further, in accordance with schedule 3, other income shall be classified as below. Interest, dividend, net gain. Yes or no? This is the answer, first part of the answer. Second part of the answer, few examples of misstatements. I think this will have 2 marks. This will have a weightage of 3 marks. I think the question is for 5 marks. Yes. The question is for 5 marks. So the first part, identify definition of misstatement. What misstatement happened in the given question, identifying that and explaining that carries 3 marks weightage. Definition of misstatement will have a weightage of 1 mark. This analysis will have 1 mark, and disclosure requirement is there now. For this also there is a 1 mark. Look at the question once again. So how they credited in P&L directly? The company had shown above income under other income for a consolidated amount. Directly they showed a consolidated amount of 9.5 lakh other income, which they need to show breakup. Where they, how they like interest income, how much, dividend income, how much, profit or gain on sale of investment is how much. They need to show the breakup. So that requirement will carry 1 mark. And examples of misstatements, some 2 to 3 examples is what relatively they are expecting. So for each example, generally it carries 1 mark or probably half a mark for every example. So 4 examples you may have to write. So that's how the paper is setting. So charging an item of capital to revenue, difference in disclosure of financial statements versus applicable framework, selection or application of wrong accounting policy, wrong accounting estimates, intentional booking of fake expense, overstating of receivable by not writing bad debts, overstating or understating inventories. You can write many other, whatever in your own. How in different ways misstatement happen. If you recollect misstatement example, which I said for 4 amount how mistake can happen, classification how mistake can happen, all that 4 examples you can write directly. Understood? Next. During the audit of a company, CSZ is using a software to select samples pertaining to sales record of the company. If you recollect sample introduction, I have used an Excel working. Sample introduction, if you recollect the original class, I have used Excel workings. There are some softwares are also available for sample selection. While performing this process, a window opens in the software prompting the user to enter certain information. Okay, when I have to apply the sampling method, some window pops up where I have to enter some information. If I key in the data, my requirement, then the sample will be executed, process will be executed. CSZ is in the process of entering information in this regard as given under. Selection interval, this is something that we need to select. Number of records to select 100. Starting record number 1. Ending record number 1000, means how many samples were there? 1 to, so 1000 samples were there. How many number of records to be selected? Sample size is 100, which means what is the interval? You remember systematic sampling, various methods of sampling: simple random sampling, stratified random sampling, systematic sampling, block sampling, monetary unit sampling, as on haphazard sampling. That's it. There are various other methods also which are there, but in our book only these are covered. The haphazard sampling means what? Where auditor will not follow any structured technique, but at the same time the selection method is unbiased. And simple random sampling is also means what? Where auditor randomly selects the items in the population where every item will have a chance of selection. What is the difference between simple random sampling and haphazard sampling? I told you. Simple random sampling we use computerized. Haphazard sampling, we don't use computerized technique. In a haphazard sampling, we randomly pick. Whereas in simple random sampling, we use random table book or we use a computerized software. That's the difference between haphazard and simple random sampling. Haphazard is a manual random sampling, whereas simple random sampling is a statistical. Of course, both are statistical only, but this is more scientific. Getting it? So this is here what method they are giving actually? Interval sampling, systematic sampling. What is interval sampling? Like auditor will select like first of all, interval is decided by with this formula. Population divided by number of samples to be selected, you will get interval. So if you select a 10th sample, again 1/10 sample you will select, 2/10 sample you select, 3/10 sample you select. That voucher number, for example, that could be the invoice number, that could be the voucher number. So based on a particular interval select, provided the interval shall not reflect a particular pattern of transaction. We have seen that interval sampling can be used by the auditor provided the interval does not resemble any pattern of transaction. What is a pattern of transaction? Maybe at every 10th or 100th transaction, entity records some expenditure. So your interval shall not match with that pattern. Are you getting it? So going through the above field, which method of sampling is likely being used in the software? Interval sampling, which is also called as systematic sampling. Discuss which foremost consideration should be kept in mind by auditor for selecting such a sample. What is the requirement? When the auditor is applying a systematic or interval sampling, he should ensure that it does not resemble any previous pattern identified or any pattern of recording of any transaction or class of transaction. Yes or no? Additionally, partner of CAZ, now which means identifying sample selection, may carry 1 mark. This answer, what is the most important consideration to be kept in mind? This will have 1 mark weightage. And additionally, partner suggested him to select first 200 sale invoices from sales book of the last month. Which method of sampling is suggested by the partner? First 200 continuous items, block sampling. So probably this might be 1 mark, this might be 2 marks, this might be 2 marks. In that way it could be. You're getting it? So like in exam also, what exactly they are asking, you should figure out. How many questions were there within the same question? So you should answer your paper by addressing all the issues raised in the question. So now we are able to understand why many students do not score in audit, because they write randomly something and come, but they don't figure out exactly what they're asking. Nowadays, especially the papers are very practical. In the past 5-6 attempts, the papers are very practical like this. Now, in the given case, the method of sampling used is known as interval sampling or systematic sampling. It is a selection method in which number of sampling units in a population is divided by sample size to arrive sampling interval. In this case, record selected 100. Therefore, sample software would pick every 10th record from 1 to 1000. So here sampling interval, sorry, I think I would have told 100. I didn't tell anything, right? I just took it as an example. Yeah, sorry. In this example, 1000 population, sample size 100. So 10 is the interval. Every 10th item will be picked as a sample by the software. Now, what is the important consideration you should keep in mind? When using this method, the auditor would need to determine that sampling units are not structured in a way that the sampling interval corresponds to with a particular pattern in the population. We must not select sample in a particular pattern in the population. Then it is not a unbiased selection. Further, partner Z suggested him to select first 200 invoices, right? He is suggesting him block sampling. This method involves selection of block of continuous. Contiguous means nothing but continuous items within the population. Adjacent items, we call them as what? Adjacent sequence. That's it. Easy, the question? Next. Truthful Products Private Limited is engaged in trading stationery items. Okay. During the year 23-24, there was a huge fire in one storage location of the company, resulting in loss of inventories by 5 crore. As a result, the operations of the company were badly affected for about 2 months. Unfortunately, the insurance claim of the company was rejected due to certain defects in the policy issued, and loss was booked by the company in the 23-24 itself. So insurance company claim was rejected, 5 crore loss. There was no change in the nature of the business of the company in relation to the last year. The draft financial statements of the company reflected the following information. No change in the nature of business. Business is same. Okay. Current year revenue from operations 80 crore. Sorry, last year it was 80 crore. Current year it was 100. This is last year. This is current year. Right now they are talking about 20 to 24. Net profit before tax 6 and 10. Tell me immediately what it should strike. Nature of business remains the same. Moreover, 2 months business was halted. 5 crore worth of inventory loss is there. How come turnover increases? How come profit increases? Remember, if you observe analytical procedure chapter, these are the kinds of example I took. Yes or no? If suddenly some loss is there or some I even took these examples, cash flow statement examples. Suppose a company has a profit, a company sales increased, but cash flow statement, cash from operating activities decreased or negative. Why? You need to analyze. Yes or no? Analytical procedure. Now look at this. CAD, who has been stat auditor for the past 3 years, has decided to rely upon some test of details are performed in the previous year. In the given situation, what is lacking as a part of the auditor? Analytical procedure he need to perform. Auditor has to perform analytical procedure. He is doing test of details. Same test of details is doing. Along with that, you should also perform what? Substantive analytical procedure. When there is a huge fire breakout where it resulted in a loss of 5 crore and the operations were disrupted for 2 months in the financial year, how come the turnover of the company increases and how come the profit increases? Which means either revenue is overstated or expenses are understated. Some issue would have been happened. So the auditor has to because based upon the understanding of the business, look at the financial statement, they are not consistent. What I understand about the business and what is showed in the financial statements are not consistent with each other. When inconsistency is there, auditor has to do further investigation. Yeah, that's it. So maintaining skepticism throughout the audit is necessary to reduce the risk of overlooking circumstances, using inappropriate assumptions in determining nature, timing, extent of audit. In the given situation, revenue from operations have jumped from 80 to 100 crore. Further, despite loss of inventories, the financial statement reflect a net profit of 7.5% in previous year and 10% in this year. Thus, approach of CAD lacks professional skepticism. I feel this is very remote because I genuinely interpreted it as an analytical procedure. I was thinking it's a 520 question. Maybe in the question, no, what is lacking on the part of the auditor? They are asking that what is lacking on the part of the auditor? Probably that could be the clue. What lacking in the auditor? Why he didn't discover this deviation? Skepticism, if it lacks only, right? Some super senior citizen would have designed this question paper. Yes or no? He will think, students also think in his perception. How come? Yes or no? But generally when I read this, I genuinely felt it's a 520 testing. Unless you specifically emphasize this word, that too, it's remote. No. How come I expect skepticism point the testing? Technical, tell me. The skepticism is it something that we actively have to push in our mind? No. It's a by default, every one of us are skeptical in every process that we do. It not necessarily audit. Anything what we do. Right now I'm talking, you are skeptically listening, obviously. You're not just blindly listening, you're skeptically evaluating my answers, yes or no. Whatever my answers are relevant to the context, you're evaluating. That's called skepticism. How can I think skepticism part he's testing? Definitely senior citizen only. For sure senior citizen, only they will have these kinds of thoughts. Others will never test like this. So he would have read skepticism and he is giving a clue like lacking. What is lacking? What is lacking is common sense. So in spite of these unusual circumstances, actually unusual circumstances is what analytical procedure basis for further investigation, right? Technically our answer is also right. So for this question, alternative answer is also right. Alternative answer is also there. In spite of the circumstances, the auditor has decided to rely upon test of details as performed. The nature and extent of procedure need to be suitably altered. He may include, he may include substantive analytical procedure to analyze variations and seek necessary explanations from management. In case of doubt about reliability of information or possible fraud, SEI requires the auditor to determine what modifications or additional procedure. When you identify any suspected fraud, what additional procedure you have to do? You have to investigate. Yes or no? So CAD, the auditor shall document the overall strategy, audit plan, and any significant changes made during the audit engagement to overall strategy. But every chapter is included. Every chapter is included. Probably, in this part, no. So, what exactly he is lacking, they asked, right? So what is lacking is skepticism. He is lacking, and he should have conducted not just test of details, he should have conducted analytical procedures also. So why he did not do that is because he is not skeptical about the numbers, because he didn't evaluate analytically the numbers. Lack of analytical procedure, he didn't perform analytical procedure. So he must have done analytical procedures, and if there is an indication of fraud, you need to investigate further to identify whether any fraud has actually happened or not. Until this you can. So skepticism definition will carry some, for sure, some 1 or 2 marks. 1 or 2 marks. Probably this question is for how many? 4 marks, huh? Yeah, 4 marks. So in that case, it will carry 1 mark, and this analysis will carry 1 mark, and in spite of this, auditor relied. Therefore, he is lacking skepticism, will carry 1 mark. Analytical procedure point will carry 1 mark. You are getting the point? So in that way, the breakup will be given. That's it. But I think it's a remote possibility. 99.99%, nobody will pick up the skepticism logic by reading this question, because it appears very clearly that it's an analytical procedure testing, not a skepticism concept testing. Correct? It is not unusual circumstance also. It's not about circumstance. It's about numbers, very clear. The non-financial information, fire accident, 2 months disruption in the business, are not consistent with financial information shown in the profit and loss account. Are you getting it? So when there is an inconsistency between non-financial information which I got to know with the financial information which is presented, obviously I will get some doubt and I have to investigate. That is what 520 says. My answer is correct only. They gave wrong answer. Next. So what is an assurance engagement? Assurance engagement means an engagement in which practitioner expresses a conclusion designed to enhance degree of confidence of intended users other than the responsible party about outcome of the evaluation or measurement of a subject matter against the criteria. That's a correct only definition. They gave definition half. In this context, give 3 examples of assurance engagements highlighting difference in nature of assurance. Give 3 examples of assurance engagements. Audit, reasonable assurance engagement. Review, limited assurance engagement. Prospective financial information, moderate assurance engagement. Moderate assurance engagement. These are the 3 examples. So you write assurance engagement, you also write that answer same as it is. So below, the following are the 3 examples of assurance engagements. What are they? Reasonable assurance, which is a high level of assurance but not absolute assurance. Review, which is a limited assurance, where auditor will give expression with a negative phrasing. Nothing has come to my attention. Like that, the auditor will give opinion. And finally, moderate assurance in case of prospective financial information. So you see 3 examples are straight away: audit of financial information, review of financial, examination of PFI. You just have to give the relevant matter. Okay. Next. Or else I'll explain that. Okay. It's like revision. No, audit I'm not explaining. Review. Review provides a lower level of assurance than audit. Review involves only fewer procedures. What are the procedures if you remember? Inquiry and analytical procedure. Only these 2 we do in review. Whereas in audit, no, we do inquiry, we do inspection, we do recalculation, reperformance, analytical procedure, external confirmation, physical verification, all possible techniques we do. Whereas in review, we only do 2, inquiry, analytical. If at all, upon our inquiry, upon our analytical procedure, if nothing felt suspicious, we directly give conclusion. Unqualified. We have review related standards we have in CA final. So there also we give conclusion. In review, the opinion, whatever we express, no, that's not called as opinion. We call it as what? Conclusion. There are various types of conclusions: unqualified conclusion, qualified conclusion, adverse conclusion, disclaimer of conclusion. In audit, we just call it as opinion. Here it is conclusion. That's the only difference. And examination of PFI. In assurance reports involving PFI, prospective financial information, the practitioner obtains sufficient appropriate evidence to effect that assumptions on which PFI are not unreasonable. I told you, in prospective financial information, definitely we can't give opinion or conclusion about future financial data. But what we can verify, on what assumptions the prospective financials are prepared. Are these assumptions reasonable or not, we will verify. When we are giving assurance on prospective financial information, we don't give assurance on the numbers. We give assurance on the assumptions used to generate these numbers. So whether the assumptions used are reasonable, are they appearing not reasonable? That is what we verify in PFI, prospective financial information. So generally, we are prohibited to certify prospective financials, technically speaking, unless you mention in the report what assumptions were used, and you have to mention the fact that you didn't vouch the accuracy of the information. You only verified the assumptions and for its reasonableness. That's it. Are you getting it? We have in CA final, there is an act called CA Act, Chartered Accountants Act. To that there is a schedule, first schedule, and to that there is some part 1. Inside that there is a clause called clause number 10. Not just that, sorry. Schedule 2, we have part number 1. Inside that some clause number 2 or 3, which talks about a CA is prohibited. A CA is prohibited to, a CA is prohibited to certify projections. You're not permitted. You're not permitted to certify projections. If at all you're doing so, you need to mention certain assumptions, all that. So otherwise you cannot give, you should not associate yourself with prospective financial information. Anyhow, we will learn that in CA final. Next. So they are not unreasonable. Further, the prospective information is properly prepared on the basis of assumption, and it is properly presented on all material assumptions are disclosed. Such type of assurance only provides a moderate assurance. Next. How many questions we solved? Okay, one only. Second question. Pure Service Limited is into litigation relating to some legal action initiated by some regulator. The matter has reached jurisdictional high court. Keeping in view uncertainty related to future outcome of the matter, the stat audit of the company has decided to include emphasis of matter paragraph in the auditor's report. Briefly discuss the considerations to be taken care by stat auditor when emphasis of matter paragraph is included. No, that's key audit matter. Emphasis of matter paragraph when consideration. For point number 1, you must obtain sufficient appropriate evidence that they are not materially misstated. Point number 2, it must be highlighted with a heading containing the word emphasis of matter, manner of presentation. Yes or no? And emphasis of matter paragraph is not a substitute for modified opinion, and it is not determined as a key audit matter. These are the considerations you should keep in mind when you are using emphasis of matter paragraph. Now, state any 2 examples of circumstances where auditor may consider necessary to include examples. Subsequent events, material subsequent events, contingencies and commitments. Yes or no? Catastrophic events, all this, litigations and claims involving the entity, or early application of some accounting standard, anything. In the financial statements, whatever auditor feels it is important for the user's understanding of the financial statements, auditor can highlight it, correct? Next. See, I'm not reading that answer. So when auditor includes emphasis of matter, include a paragraph with a separate section emphasis of matter, include the paragraph with the clear evidence to the matter being emphasized, and 2, where relevant disclose that fully describe the matter that can be found in financial statement. The paragraph shall refer only to the information. Okay. The paragraph can only refer to information presented. That to information appropriately presented or disclosed in financial statements. Indicate that the auditor's opinion is not modified in respect of the matter emphasized. You know this, I'm very good tongue twister. Earlier used to be very strong, now there is a word in English called pneumono-alter microscope. It's the lengthiest word in English. Pneumono-alter microscopic silicovolcanoconiosis. It has some 41 characters. It's related to nothing but cough. cold and cough, lung related disease. That's it. Suddenly when I'm seeing Insta reel, no long ago, I saw a child pronouncing this, and I took some half an hour. I mucked up, and I practiced. That's it. Came. You watched Kalki movie? In that climax, Kamal Hassan dialogue is there, no? Kalki movie, in that Kamal Hassan is the main villain, right? Yaskin, Supreme Yaskin. Yes. In the climax, there is a dialogue. Is it in Tamil? That dialogue actually in Telugu, it's in Telugu. You watched a movie that, first of all? In that last, there is a dialogue, last final climax. Kamal Hassan dialogue is there. In Telugu, it is actually of a famous poet, a Sri poet. Probably here, Bharatiya poetry might have been used, I don't know. There is a dialogue, Patitulara, Brashtulara, Daga Padina Tammulara. Is it there? In Telugu only it will come, because no, it's actually, in Tamil it will be there. Okay, fine. There's a dialogue says like this, Patitulara, Brashtulara, Daga Padina Tammulara. Kamal Hassan dialogue, Dedavakandi, Jagannatha Radha Chakra Lastunnai. Radhachakra Pralaya Gosha Bhumargam Pattistanu Bhukampam Puttistanu. This is a dialogue. This is actually Telugu. This is actually native Telugu. Like too much of Telugu. So in Tamil, I think some parallel dialogue only. Same dialogue would have been dubbed into Tamil probably. In Kamal Hassan also in various shows he tells this. Same Telugu dialogue he only repeats. He only told. In Telugu he only dubbed. Like they didn't put any other artist. He's a very good linguistic. Kamal Hassan speaks almost multiple languages. People from Tamil Nadu and Kerala, no? Like my Hindi friends, like I have some Kerala friends. They speak Hindi. Very well they speak Hindi. Kerala friends, many of my Kerala friends. I asked them, like, how come you speak Hindi? Oh, it's a second language for us, they said. First of all, I don't know what do you mean by second language, because I'm a Telugu medium student. What is second language, I asked. No, it's there in our school, they said. Like school means what? Again, I mean, like what exactly? No, we have a subject. We also have Hindi subject, but the beauty is we know how to write and how to read, but we can't talk. Because our Hindi teacher herself don't know Hindi. She herself cannot speak Hindi. So how come? Next. Tamil Nadu and Kerala, the education is very good. Andhra education is very poor. Only international schools you will get somewhat decent education. Remaining schools, English teacher don't know English, Hindi teacher don't know Hindi, Telugu teacher knows half Telugu. That's how Andhra education is. Next, CAY. The statutory auditor of a company is in the process of determining materiality for financial statements while planning audit. Okay, he is in the process of determining materiality. Since materiality is a matter of professional judgment, he is affected by auditor's perception of financial information needs of financial statements. He is reasonably making certain assumptions about the users of the financials. When we are determining materiality, we can make certain assumptions about users of the financials. What assumptions we can make about the users? Shall I make an assumption that users don't know anything about financials, or users know the principles of financials? Which reasonable matters is, we have a question on this, some second or third question. In materiality topic, it is second or third question. What assumptions the auditor can take? I can take the assumption the auditor's determination of a materiality is a matter of judgment and is affected by the perception of financial information needs of users. Of course, in this context, it is reasonable for the auditor to assume that users have a reasonable knowledge of business, economic activities, accounting, and a willingness to study the information in the financials. And users understand that financials are prepared to the levels of materiality. Users recognize the uncertainties inherent in the measurement in accounting estimate judgment. Users make reasonable decisions on the basis of information in the financials. With these assumptions, I should prepare financials. Remember, if you recollect, key audit matter I'm telling, I told you this point. Key audit matter is not useful for anybody. First of all, people don't understand key audit matter. I told this point. And even when I'm explaining emphasis of matter paragraph, I made this question. Do you think the shareholders read entire notes to accounts? We ourselves won't understand. That's honestly speaking. That kind of attitude auditor should not keep in mind. If you keep that attitude in mind, now what you will do? You will not be giving all the disclosures and all, because anyhow they don't understand. With that attitude, you won't give all the disclosures, you won't follow all the requirements. So what the standard says, SA 320 says, or for the auditor, it is reasonable to have an assumptions about users. What assumptions? That users have knowledge of business, knowledge of economic activity, they are knowledgeable about accounting, they are willing to study the entire financial statements and taking decisions based on the information in the financials, and users understand that financials are prepared to the levels of materiality, and users recognize the uncertainties in the estimates, judgments and consideration of future. They all know this. You assume that they know this. Accordingly, you give disclosures as required by applicable financial reporting framework. Company will give disclosures. You verify whether they're right or wrong. You're clear? So the standard itself explicitly says that assume that users are knowledgeable. In reality, whether or not. So assume that users are knowledgeable. Yes. Just 2 days ago, in my CA final, we are discussing 320. Same point I said to them. Few days ago, some 3-4 days ago. I told this itself can be asked as a question. This I said 4 marks. And exactly it's there here. In the MTP. During the course of statutory branch audit of nationalized bank, CA Amrish is performing audit procedure in relation to advances. He has verified this selected sample of borrower accounts representing advances, found nothing is unusual. Okay. In a banking environment, there exists a documentary evidence regarding observations and comments on the advances which can be useful to statutory branch auditor in performing effective. Listed few documents auditor will examine with respect to advances. Credit worthiness of the customer. What are the documents? Loan documentation we have to verify. Loan authorization document, sanction letter. All that we need to verify, no? In case of what are the documents you will verify with respect to loans and advances. That is what they're asking. So straight away we'll see. Okay. They are asking what are the other reports that okay. The recent marathon I covered this. Specifically I highlighted this point. And I think I'll show you directly in the recent marathon itself. I'll show you. Yes, a minute. I specifically said this. This can be asked as a question. So in this question, in this last part, technically 8th question or 9th question. Yeah, this one, reliance on review report of other auditors. This one, this J point is specifically told in the marathon also. This itself can be asked as a separate question. This is what they asked actually. The auditor should take into account adverse comments, if any, in an advance appearing in the following. I think here audio output is not coming up. Yes, you see 4 marks question I set. Exactly. In the marathon also I covered this. So the same is there in the MTP2. MTP2 came just 4 days, 5 days ago. This marathon I did 10 days ago. Okay. Next. So like what are they saying? In a banking environment, there exists some documentary evidence containing observations and comments and advances which can be useful to statutory branch auditor. So there will be some observations or comments on advances by others. There can be observations or comments by some others that can be useful to statutory auditor. CA Amrish, the auditor should take into account the adverse comments, if any, on advances appearing in the following. In the following reports, on the advances, some adverse comments would have been there. What are they? Previous year audit reports, latest inspection report, internal audit report, concurrent audit report, various report on security related reports, any other internal reports, or managers managers charge handing over report when incumbent is changed. Like when manager is changing, you know, that manager will submit entire documentation to the new manager. So that reports. So in this also, there may be instances of some observations or comments by others, not stat auditor, which stat auditor will consider while performing audit of a advance. That is what they're asking. So like here in a banking environment, there exists documentary evidence containing observations and comments on advances, which can be useful to statutory branch auditor. Technically speaking, this question level is little tough, because understanding exactly that point is what they are asking is bit tough. Generally, when what we will assume here, in a banking, there exists a documentary evidence regarding observations, there exists a documentary evidence containing observations or comments on advances, which can be useful. We generally think of what documentation to verify for advances. We generally think of what documentation to verify for advances. That's why reading questions should be very, very careful. So what exactly they are asking? Twice you assess it. Whenever you're reading a question, sometimes think twice, like what exactly they're asking. Is it about they're asking how to verify advances, or are they asking something else? So in these chapters, bank audit, there is a possibility of tricky questions like this. You're getting it? Not just bank audit. You have to be alert. You have to be skeptical when you're reading questions. That's it. Next. While auditing the financial statements of Bro Traders LLP, he's a bro. CIL is carefully going through LLP agreement. Briefly discuss the key points CIL should pay attention in LLP agreement and the reporting responsibilities of L concerning financial statements of Bro LLP. Too awkward. So what you need to consider in LLP, like various, what are the points you consider in a partnership as well as in LLP? The points are common, like what is the nature of the business, what is the capital contribution, drawings allowed or not, salaries and commission how much, borrowing powers, any 3 or 4 points enough. In this, any 4 points enough. Reporting responsibilities concerning LLP. Auditor has to mention whether records appear to be correct and reliable, whether he is able to obtain all the information and necessary explanation for his work, is there any restrictions imposed upon him. This is a specific reporting requirement in case of LLP audit. We have in companies 143 subsection 3, right? 10 checklist items. Whether the auditor has got necessary information and explanation for the purpose of audit, whether in your opinion proper books of accounts are kept, whether branch returns that are liable to be received are received or not, whether financial statements are prepared in accordance with accounting standard 143 subsection 3 reporting requirement. Yes or no? Same way here for LLP 3 reporting requirements were there. Same way you have in corporate societies reporting requirement. Same you have in bank audit reporting requirements. At 4 places we have reporting requirements discussion. Getting it? So probably reporting requirement is there, right? Reporting responsibilities. Further 3 marks it will be carrying. And what are the points to be verified in LLP agreement? 2 marks it will be carrying. Technically speaking, this is also some unexpected way of testing. This one is unexpected way of testing. This is also a different unexpected way of testing. And professional skepticism, that point, yes or no? This one, this 4 marks. So this is something I felt odd. Next. CAN, statutory auditor of Rock Limited, is in process of final assembly of audit file. Under what circumstances a stat auditor can make changes to documentation during final assembly process? Give you examples. Discarding superseded documents, sorting, collating. Exactly. That only. So deleting, discarding superseded documentation, you can tell, no issue. Sorting, collating or cross-referencing working papers, signing of completion checklist, documenting evidence that auditor has obtained, discussed, agreed with relevant members of engagement team before the date of auditor's report. Yesterday, no, like my team members were there. They were surprised, like students are answering. He's asking me, who taught them audit? Who else? I told him, like they're asking, they don't know, right? So who taught them audit? So like that super answering, whom you think I asked them? They're answering definitely some very well-known faculty. It will not be this much intense. My recordings, they watched it. I told him. Getting it? No, that understanding skill, no, like he's also a CA finalist when yesterday he came. So that understanding level is different. Okay, like these questions, no, reading and immediately understanding, no, that understanding level you can massively find the difference. So that's that. I mean, the procedure which I follow is a well-established procedure. I felt very proud when you are answering like this. Thank you. Next. I hope this clap should turn into exemptions. It should. Next. TAZ. But that doesn't mean next 20 days you can be free. You have to study. TAJ is appointed as stat auditor of Sigma and Beta Limited for the year 23-24. During the audit, he observed trade receivable amounting to 50 crore are reflected in financials of the company. He wants to obtain sufficient appropriate to conclude that trade receivables have been valued appropriately. Suggest a few audit procedures. Items of financials, trade receivable valuation, obtain aging analysis, see long outstanding debtors, and verify whether provision has been calculated correctly or not. Get external confirmation from the data to determine their existence. So you need to do certain procedures like this. You need to write 6 points approximately, relevant points. So then only you will get this. And I will not read the answer, because items of financials you first have to thoroughly read and learn and then read these answers. Next. While planning the audit of Me Limited, CAM has planned nature, timing and extent of risk assessment procedure to identify and assess risk of MMS. How risk should be assessed by auditor M? It is also well known that assessment of risk is a matter of professional judgment. Which specific matters are not included in audit risk? Additionally, CAK is one of the team members of the view that materiality and audit risk are only considered planning stage of the audit. Comment. They are asking completely. Fine. So, how risk should be assessed by auditor? Inquiry, observation, analytical procedure. Then, what specific matters are not included in audit risk? Remember, what is audit risk? Risk of expressing inappropriate opinion. Financials are materially misstated, but not loss of business reputation. Auditor's risk is not included. Risk of expressing unmodified opinion when financials are not materially, when financials are materially misstated. That is not audit risk. When financials are wrong and I say unmodified opinion, that is risk. Getting it? Giving modified opinion when the financials are not free from MMS, that is not audit risk. Yes or no? As well as business risk of the auditor, loss of client, loss of reputation, that is not audit risk. Further, additionally, they are asking, one of the team member is of the view that materiality audit risk are considered only at planning stage of the audit. No, audit risk analysis and materiality are considered throughout the audit. Yes or no? Auditor has to be alert to new risk identification and materiality, changes to materiality. So I think for this 1 mark will be there. What is not included in audit risk, 1 mark will be there. And the risk assessment process includes what? 3 marks will be there. We'll see the answer. They gave differently. We'll see how they give. The assessment of risk is based on audit procedure to obtain necessary for the purpose of evidence obtained throughout the audit. The assessment of risk is a judgment rather than matter capable of precise measurement. Obviously, risk cannot be measured precisely. Audit risk is a technical term related to process of auditing. It does not refer to auditor's business risk such as loss of litigation, adverse publicity, or other events arising. For the purpose of standard audit risk does not include risk that auditor might express an opinion that the financials are materially misstated when they are not. This risk is ordinarily insignificant. In the given case, CA case of the view that materiality are considered only planning stage. The concept of materiality by the auditor is both planning and performing the audit and in evaluating the identified misstatements. Means materiality is considered, planning is considered throughout the audit, at the time of planning the audit, at the time of performing the audit, and even at the time of evaluating effect of identified misstatements, if any, on the financials and informing the opinion. Thus, CA view is not correct regarding materiality and audit risk. The first paragraph alone, I think they gave differently. What is included in risk assessment? Like this, look at the question. Look at the question. How risk should be assessed by auditor CAM? How it should be assessed? They didn't answer, no? They didn't answer, right? How risk should be assessed? It is also known that assessment of risk is a matter of judgment. We'll see once. And of course, the assessment of risk is a matter of judgment rather than a matter capable of precise measurement. We just acknowledged their statement. This is okay. Now here, how the risk is assessed, they asked. Assessment of risk is based on audit procedure to obtain information necessary for the purpose and evidence obtained throughout the audit. I think this is not matching. Generally, no, assessment of risk and identification of risk we don't do separately, we do cumulatively. The moment we identify risk, we assess it immediately. And moreover, how the risk is assessed, if at all specifically they ask me, the risk assessed will be classified into two levels. What are they? Exactly. Financial statement level and assertion level. Even if they give that answer also to some extent acceptable, because that is the assessment level of risk. So they didn't answer specifically assessment. The question they asked, but they didn't answer specifically here. They just acknowledged it. That's it. So whatever they asked, they didn't. And I feel audit risk discussion, it has only 1 mark weightage. Probably this is the suggested answer. This will have 2 marks weightage, and this will have 2 marks weightage, and the first part will have only 1 mark weightage. So if at all based on the answer which they gave, based on the answer which we analyzed, we lose only 1 mark. Because introduction we wrote inquiring the management, observing, analytical procedure. This is how we identify the risk, and the identified risk shall be assessed into 2 levels: financial statement level risk and the assertion level risk. And assessment of risk is a matter of judgment and not a matter capable of precise measurement. Further, audit risk is a technical term used in the process of audit. It does not include auditor's business risk, loss of loss of client's reputation, litigation, all this. Further, audit risk does not include risk of audit risk does not include giving an opinion on the financial statements that are containing misstatement when they are not. Yes or no? And in the given case is of the view that audit risk and materiality are considered planning stage. No, the audit risk and materiality are considered throughout the audit, at the time of planning, at the time of performing, at the time of conclusions. Conclusion is called as evaluation of misstatements identified. That is what 450 standard is dealing with. Yes or no? So evaluation. So throughout the audit we use. Therefore, CAM is wrong in his in his part. CAK is wrong in his part. That's it. So probably if at all you write the answer which I told, 1 mark you will be losing, because that introduction is not given here. But I think this answer is not proper. It's vague. The introduction part is little vague. Next, because they may argue saying how risk should be assessed by the auditor. They are not asking how risk is identified by the auditor. On that note, only assessment they are asking, right? Assessment means financial statement level, assertion level you should decide, no? That answer should be written right, yes or no? Next. CAD is planning an audit of listed company. List specific documentation requirements in accordance with 300 in relation to planning such an audit. How such planning documentation is useful. So, benefits of planning. They are asking what? Benefits of planning. The documentation of overall strategy is a record of key decisions considered necessary to properly plan and to communicate significant matters. Okay. The documentation of audit is a record of plan, nature, timing. It also serves as a record for proper planning and procedures. A record of significant changes to strategy and plan and resulting changes. Explain why the changes were made. All that has to be documented. Nothing but they are asking a combination of benefits of planning and documentation regarding plan. What we need to document? We need to document overall audit strategy, audit plan, changes made to it along with reasons. Yes or no? Changes made along with reasons, and that we need to document. Further, audit plan serves for various purposes. Documentation of strategy, documentation of plan helpful for various reasons. So they gave a generalistic answer, which is not from a specific question. They gave a generalized answer. But even if you write a specific answer based on your understanding, 99% they'll give marks. You're getting it. This is also one more question, which is little different. Next, 143(1) of the Companies Act states that every auditor of a company shall have access to books of accounts, vouchers, and shall be entitled to require from office of the company such information, explanation as it considered necessary, and shall inquire into certain matters. State those matters to be inquired. 6 items. Enquiries. 143 subsection 1. Enquiries whether personal expenses are charged to revenue account. Whether company has allotted any shares for consideration for cash. If so, cash is received. If not, position stated in the balance sheet is correct, regular, and not misleading. First point, whether loans and advances given by the company, are they prejudicial to the, if at all they are secured, are they properly secured? Whether the terms and conditions are prejudicial, whether transactions which are merely represented by book entries are prejudicial to the interest of the company, whether investments were sold at a price less than purchase price, Remember? 6 inquiries in 143 subsection. In audit report, we have part 2, right? Beginning first question, that only. In reporting requirements, first part is that only. 143 subsection 1 inquiries. It's actually straight question. Messrs. Sweer and Associates. Messrs. Sweer and Associates is appointed as auditor of KMP Limited. During the audit, auditor wants to verify that trade payables and liability balances that were supposed to be recorded were recognized in financials. Which assertion auditor want to ensure? What procedure? Whatever trade payables and liability that were supposed to be recorded have been recorded. Whatever they are supposed to be recorded, nothing but existence and completeness. Whatever trade payables that are there to the company, are they fully accounted or not? Supposed to be accounted, were accounted or not? That's actually what completeness assertion is also focusing. So how do you verify completeness of trade payables? How do you verify completeness of trade payables? First, we have to look at completeness of purchases accounting. If purchases are accounted properly, general trade payables are also accounted properly. So purchases audit related some points have to write. And of course, in trade payables also they have given certain points. So how do you ensure? Cutoff and all we should apply. We should apply cutoff. We can also obtain direct confirmation procedure. So they will give certain points. You just have to write those points. 5 to 6 points you have to write. Please read items of financials. CAM. The auditor of a company has planned to use substantive analytical procedure during the course of audit. In this regard, he has decided to use such procedures in the following. Okay, he wants to use substantive analytical. In this regard, he decided to use the procedures for testing relationship between sales and cost of sales, for testing rights over certain assets forming part of account balances. Okay, comment upon his approach along with reason. Testing relationship between sales and cost of sales. Testing relationship between different elements of financial information is analytical procedure. Whereas testing rights over assets, nothing but we are asking ownership. This is not analytical procedure, right? Exactly. That's not an analytical procedure. What is it? You are testing assertion called rights and obligation. It is assertion checking. That is not analytical procedure. Getting it? Comment upon his approach. This does not constitute analytical procedure. We'll see. Yeah. Substantive analytical procedures are more appropriate when account balance or relationships between items of data are predictable. Generally, sales to cost of sales is highly predictable. Because if cost of sales increase, generally sales increase. A predictable relationship is the one that may reasonably expected to exist and continue over a time. Obviously, the cost of sales and sales are highly interrelated. In the given case, he has planned to use substantive analytical for testing relationship between sales and cost. Therefore, auditor approach is appropriate. Whereas in the given case, CAM planned to use analytical procedure for testing rights. Such procedure are likely to be less effective because analytical procedure may not give solid evidence or sufficient appropriate evidence regarding ownership, regarding rights and obligation. We have seen this point in audit evidence chapter. One audit procedure may be suitable for one assertion, but may not be suitable for other assertion. Same way, analytical procedures may not be suitable for some assertions. Using substantive analytical is affected by nature of the assertion. What assertion you are testing? If you are testing valuation, completeness, maybe to some extent analytical is helpful, but ownership, existence, how come you know existence? Only if you physically go and see. Yes or no? Substantive analytical may be more effective in providing evidence for some assertions like completeness and valuation than for others. That is rights and obligation. In the given case, rights and obligation assertion is he want to test the rights and obligation assertion through analytical, which is not possible. It is less effective. Correct? Very good question. This is next. Mr. Vayu is appointed as auditor of Prism Limited for the year 23-24. He wants to ensure that PP has been valued appropriately and as per GAAP and practices, and also Prism Limited has a valid legal ownership over PPE claim. Claim it to be held by the entity and recorded in the financials. Explain how auditor will verify the same. Valuation only. PPE valuation. First to look at the items of cost that is capitalized. Original cost, how much it is capitalized. For that verify. 2. What depreciation method they have used, verify. What is the useful life they have used, verify. Whether residual value is considered while calculating depreciation or not, verify that. If any revaluation or impairment is done, verify that. Like this, you can write some 5-6 points easily with a general knowledge. But then if you read the once thoroughly read entire items of financials and sync with what they're exactly asking, you can write much better answer. Okay, that I'm not repeating. This is again items of financial statements question. This is TP and Co, a firm of chartered accountants, has been conducting audit of KSR Limited since last 4 years. Okay, this company KSR Limited has diversified their business into new areas during the last year. The senior member of the audit team handed over the standard audit program of earlier years to the auditors and instructed them to follow the same. Earlier year standard audit program is given to them where there is a change in line of business. The assistants are conducting audit accordingly. Whether the attitude of the assistants is justified? No. Assistants has to be awake, keeping in mind changes to the business environment, all that. Standard audit program may not be evolved for all the businesses. So audit program has to be modified according to the requirements of the business. That answer only you have to write. That answer only you have to write. The assistant should keep an open mind as follows. Yes or no? This is nothing but precautions. You have a question called precautions to overcome disadvantages of audit program. In audit program, 3 parts were the advantages, disadvantages, and precautions to overcome. That precautions they wrote. Getting it? Next, you read that later. Okay, this question also you read that. Approximately, you see, 5 to 6 questions in this question paper is bit different from our expectation. So hardly 30 marks. Next, as per 560, when after the date of audit report, but before the date of the financials are issued, a fact came to the known of the auditor that had it been known at the date of audit report, it may have caused the auditor to amend the audit report. In this context, what is meant by date of financial statements issued? It is the date when the financial statements and auditor's report were made available to shareholders and third parties. Can it be later than the date of providing audit report? Never. Can it be, can it be later than the date of providing audit report? Obviously. In order to issue to the third party, audit report and financials must be issued. So, date of financial statements issued can be yet or later. The date of audit report issued to the entity. Correct? That's it. So, there is no possibility that date of financial statements issued cannot be earlier than the date of audit report issued to the entity. That's it. Next. CIN, Stat Order of QST Limited, appointed for a term of 5 years, has completed audit for the first year ending 31st March 2024. In compliance with requirements of standards, an audit file has been assembled. After about a period of 6 months from the date of issue of audit report, he gets a call from CF of the company to share complete file so that financial report of the company can be improved upon the coming period. Is it mandatory for the auditor to share the audit file? No. As per standard on quality control, audit working papers are property of the auditor. Auditor can at his discretion share portion of working papers to the client or give extracts to the client at the discretion of the auditor, but it is not mandatory for the auditor. What are the requirements for making audit documentation available? What are the requirements? Requirements are very simple, that such a disclosure should not undermine the validity of the work performed and it should not affect independence of the auditor. See whether the same answer wrote or anything else. Yeah, correct only. It shall not undermine the validity of the work performed, or in case of assurance engagement, independence of the auditor. Both should not be affected. Then only he can make working papers available to the third parties, client or anybody. But that's it. MTP 2 is also completed. Confident. You need to read items of financials, all that you need to read. Because in items of financials, you are very slow. Audit program strategy chapter also, you are not able to respond. So you need to, I think you need to watch these classes. Okay, please watch, finish all the classes and then once again come back and read MTP 1 and 2. So let's begin this RTP for paper 5 September 24 exams. Case scenario is there. Pluto Limited is engaged in manufacturing and distribution of furniture after COVID. As the number of people working from home has gone up, this customizable range home office furniture has gained a lot of importance. They were able to perform very well over the years, and the same has been reflected in their financial statements. Furniture manufacturing company. During the year 23-24, Saha and Associates was reappointed as auditor. The new engagement team has Saha and 5 article assistants. Given the large volume of transaction, the partner instructed the articles to review the financial statements and auditor's report from the year 20 to 23 to gain a thorough understanding. So look at the previous year audit report, previous year financial statements to get some understanding. While reviewing the summary page, one of the article, Kabir, noticed that few points were under discussion with the partner before the finalizing the audit. The team verified the following points with respect to employee benefit expenses. Okay, what are they? Employee benefit expenses recorded in the books were actually incurred during the period. So while verifying employee benefit expenses, no, the team is verifying the following. What they verified? First one, whether employee benefit expenses recorded in the books were they actually incurred during the year. Nothing but they're testing what? Occurrence. The expenses in respect of all personnel have been accounted. What does it mean? Exactly, completeness. And the expense recognized during the period are pertaining to the current accounting period. Exactly. Cut off. Okay. Answers pathingla? Illa. I'm just joking. Okay. It was also noted that, by the way, it's an MCQ, right? Sorry. It was also noted that dividend to equity shareholders for 20 to 23 was declared on 15th April after the end of the respective financial year and was recognized as liability. Wrong, right? It must be disclosed. That's it. It should not be recognized as liability. Dividend declared after the end of the balance sheet date. It should not be recognized in the balance sheet as a liability. Another article, Krish, noticed that debtors constitute a major component of the company financial statements. As a part of audit procedure, the auditor requested the client to obtain external confirmation from parties. Okay. For this, a list of all the debtors were obtained and a random sampling was performed by the auditor. The client directly obtained the selected debtor confirmation from the customers on time. Who should obtain? Auditor should obtain. Client should not obtain. But with the permission of client only we send a request. But debtor should directly respond to auditor. So here it is wrong, right? Krish also observed additions in assets amounting to 50 lakh during the year supported by sufficient appropriate evidence. He observed addition in assets during the year supported by evidence. However, upon scrutiny, it was found that some of the invoices were not in the name of the company. He is verifying ownership. Further, cash and cash equivalents were classified as balances with banks, correct only. Checks and drafts on hand, correct only. Cash on hand can be correct. Earmarked balances with banks. Earmarked balances with banks generally shown as other current asset. Generally shown as what? Other current asset. It is not cash equivalent, means we cannot use it for our general day-to-day purpose. Earmarked balances with banks, unpaid dividend account, share application money pending allotment, that bank balance, CSR related amount kept for CSR special purpose. These are all accounts which are not equivalent to cash, which cannot be used for general day-to-day expenses. So these are to be kept as other current assets depending upon when you have to pay. Clear? Based on the above, answer the following. Which among the following assertions are discussed with respect to employee benefit? What are the discussed? Occurrence, cutoff, completeness. 3 they discussed. No? 1 is not covered. Measurement point they didn't cover. Employee benefit expenses we said. So 2, 3, 4. So 2, 3, 4. That's it. B answer is correct. Correct? Next. Whether disclosure of dividend under liability, is it appropriate? The answer is no. Okay, 3 options were there. So you need to read. The amount should be recognized equally. No. The amount should not be recognized. It should be shown as disclosed. Yeah, correct. The amount neither recognized nor disclosed. That's wrong. So the answer is C. Krish pointed out that the method followed to obtain debtor confirmation was not as per 505. Therefore, Saha and Associates should re-perform the same. Correct? No? Yes, correct. So let us see. As per 505, confirmation should be directly obtained by auditor. Further, for all significant balances as on balance sheet date, confirmation should necessarily be collected, and for smaller balances, random sampling can be performed. This sentence is absolutely right, but we'll see. It is okay to obtain confirmation through clients, wrong. As per 505, confirmation should be directly obtained by auditor, whether random selection of all the debtors, irrespective, wrong. We classify the debtors into two categories. We stratify them, large value debtors and other debtors. Large valued 100% we get confirmation. Small items we do get sampling. Next, either auditor or client. No, that means option A. Next, which assertion affected in the case of fixed assets? Ownership, yeah, rights and obligation. Next, cash and cash equivalents were not properly classified. Which of the following is incorrect? Earmarked balances. That is incorrect. You cannot classify them as cash equivalent. Then, general MCQs. C.H. Chatur provides accounting and bookkeeping services to Shiv Ganga Limited. He is also offered an audit of the accounts of the Shiv Ganga. Can he do so? Exactly. He cannot accept that. Which threat to the independence might be involved? Self-review threat. Next, Sargun is conducting statutory audit of a branch of KBC Bank. During the course of audit, it is noticed that one borrower has availed a housing loan and a car loan from the branch. Okay, housing loan EMIs were overdue for 120 days on balance sheet date, whereas car loans were overdue for 60 days. Which of the following statement is correct? Tell me, when a customer is having multiple loans with the same bank, if one loan is classified as NPA, remaining loans also shall be classified as NPA. NPA classification is borrower wise, not asset wise. Correct? Housing loan should be classified as NPA. However, car loan, that's wrong. Car loan should be classified as NPA. No, that's wrong. Both housing loan as well as car loan should be classified as NPA in accordance with RBI. This answer is right. Both housing loan as well as car should be standard. No, the answer is C. Only 8. Sagar Finance Corporation Limited is a government company. The audit of the company is conducted by stat auditors who are appointed by C&AG, who is empowered to conduct supplementary audit. C&AG only. C&AG is having right to conduct supplementary audit, right to conduct test audit. 143 subsection 6 and 7. Getting it? The answer is B. So we'll see the answers. So B, C, B, C, B, yes. Okay. Next, D, D, B, A, C, B. D, B, A, C, B. Yeah. Perfect. Easy. The basic MCQs. Okay. But I must tell you, you're wonderful. Like you people are very wonderful, very impressive. I don't generally tell every batch. Okay. I'm very genuine guy. I don't say you people are wonderful audience in every meeting. No, I never tell that. But when I say means, it really means. Because I sense in every MCQ you're answering like tucky you're answering without any further thought. Like by the time I read question itself, you're answering. So that demonstrates your conceptual clarity that you have. So we have descriptive questions. Let's go to the descriptive questions also. We'll finish it off. We'll have ample amount of time later. Descriptive questions. Chapter 1. Kriti, a CS student. Remember the basic difference between MTP and RTP. MTP is a test paper where it's like a mock exam. Whereas RTP is just for revision purpose. Just for revision purpose, few concepts they'll brush up. That's it. RTP is in this format exam question. That's why in RTP you see chapter wise they'll give you. Some students ask me, sir, how many marks we can get from RTP, MTP? Who knows? How do I know? In one attempt they won't ask at all. In some attempts they'll ask. See, typically in RTP, MTP, in RTP, we are having it started with question number 9. Okay, let me just question number 9 to 20 means almost 11 questions were there here. Correct? 11 questions were there in RTP, and in MTP 6 into 3, 18 to 20 questions were there. In MTP 2, another 20, close to 50 questions were there. RTP, MTP, how many marks you will be getting? People will ask me. How many? Descriptive questions are 50. In our subject itself, we have 500. In our subject itself, how many we have? 500. 10% of the questions are covered here. Technically speaking, 10% of the questions are covered here. People, what they say, generally, how many marks you will get from MTP, RTP? For sure, you will get 15 marks, they say. A paper for 120 into 10% is equal to 12, somewhat approximately 15. Sometimes it may not, you may not get, or sometimes you may get. Even proportion to the total syllabus is also same, right? The proportion of the number of questions that they are giving given, like in MTP, MTP2, MTP1, RTP put together is 50 questions out of 500 we have. Not even 500, we have less than 500 for sure. So proportionate is almost 10 to 15% of the syllabus is there in MTP, RTP. In such a case, obviously in exam also 10 to 15% will reflect, no? Definitely it will reflect. You tell me all the standards touched or not. 530 is there, 520 is there, 320 materiality is there, every standard, 501 is there, 505 external confirmation, MCQ, everything, one or the other way it was tested. So when all the standards are tested, obviously from where examiner will test other than this. So you will get questions from MTP, RTP, not because they were covered in MTP, RTP, because they're part of the syllabus. Getting it? So don't be with that. When you're practicing MTP, RTP, practice to know how examiner test will, how the question paper testing pattern will be, how they will test different questions. By learning, am I able to correlate here? That is the reason. That should be the objective, and not because how many questions will come from this to the main exam. No, that should not be the approach. So she's Kriti, a CS student, has joined articles in a reputed audit firm. She considers audit engagement to be an assurance engagement. Her understanding is that audit engagement is the only kind of assurance engagement in which practitioner receives written assurance report in appropriate form. However, her friend Soumya does not agree with her. She is of the view that assurance engagements are not restricted to audit alone. Besides, Soumya also thinks that assurance engagement can also relate to matters other than historical information, whose views appears to be correct. Soumya views is correct. Correct, no? So you need to write assurance engagement meaning. It's a three-party relationship. Types of assurance engagements. 3 assurances we have, right? Reasonable, limited. Previous MTP2 also we have a similar question. That's it. So, okay, I need to open that answer. So first one, audit engagement is an assurance. However, assurance engagements are not restricted to audit alone. There are other assurance engagements too, like review engagements, engagements providing assurance involving prospective information, engagements providing assurance on internal controls in an entity. Assurance engagement provide assurance to user. The difference is of the degree, whereas audit provide reasonable, which is a high level, whereas review provide a low level assurance as compared to. There are also assurance engagements which are related to matters other than historical financial information, like providing assurance on prospective financial or providing assurance on controls in an entity. What is controls in an entity? We have a discussion in CA final. In assurance report involving PF5, the practitioner obtained sufficient appropriate evidence to the effect that assumptions are reasonable. In the given case, Kriti of the view that engagement is only kind of audit is the only kind of assurance. Therefore, view of Soumya is correct. So Kriti is narrow, Soumya is thinking broadly. That's it. Next. Any of your names matching here? Abdiya. Fine. Next. TAN. In the name Arkilla. Engagement partner of LPS and Associates. CAN is engagement partner of LPS and Associates, is planning for audit of large company. As a part of preliminary engagement activities being performed in this regard, he wants to ensure that compliance with independence requirement is adhered. How he shall form a conclusion that audit firm complies with the independence requirements? I think this one, I think essay 220 points you can write. Essay 220 points you can write. No. Quality control, independence. What are the points that you have to ensure for independence? In quality control discussion is there. Correct only. Essay 220 only that point is there. How do you verify independence? We should obtain information from the firm to identify. By the way, we have a question called preliminary engagement activities. Inside that ethical requirements is there. Inside that independence is there. If you observe that question, if you observe that my video, I told the same points are there in 220 also. I told SQC. Same points I told in 220 also. It's actually 220 copy pasted. It's actually copy paste of 220. Obtain information from the firm to identify and evaluate circumstances, relationships that create threat, evaluate breaches, whether they create, and see safeguards. Apply safeguards to eliminate the threats or reducing to an acceptable level. If you are failing to apply, you have to withdraw from the engagement. This discussion is only there in ethics chapter, no? Ethics chapter only, ethics, terms of engagement, quality control put together one chapter only, no? This is what I linked in preliminary engagement activities. If you see the video class, I think you will get it. I linked it exactly. Companies are increasingly using data analytics for managing their operations. Auditor can also obtain good results by using data analytics. What are the tools and techniques used by auditor in applying principles of data analytics? In which areas data analytics can be used? Data analytics means what? And what are the areas where data analytics can be used? Random sampling, like that we have some examples in computation of balances, statutory compliances, there and all we can use data analytics. It's our audit in automated environment chapter. Actual risk assessment chapter, in that one segment is audit in automated environment. Inside the data analytics discussion is there. Where data analytics will be used by auditor, that discussion is at that point you have to write. Quality Products Limited is engaged in manufacturing of cycles. As a part of manufacturing activity, it sends raw material to some business entities and procure finished components from them. As on 31st March, inventory lying with such business or material. Being stat auditor of quality, how will you obtain sufficient evidence regarding existence and condition of inventory lying with third parties? Get an external confirmation or get an external confirmation or arrange another auditor, or you directly go and attend. Yes or no? These are the points, right? Directly straight question. In 501 last, in 501 first element is their existence and condition in that last para. Audit of financial statements. Even in the marathon I have covered this. Once again, no. Once I completed this RTP, I'll merge MTP1, MTP2, RTP put together into a single video and upload it on the YouTube. What you have to do is first finish marathon. Part 1, part 2, part 3, 3 parts were there. Finish all the marathons. Then once again just watch this. Just once again watch this particular, wherever I told no the tricky points, that alone you watch. When you're watching, you will understand. And at the same time, when you're watching the class, no marathons or on the YouTube, whatever, standard speed. I hope you're watching all the classes at standard speed. Play higher speed, 1.5, 2x, 1.2, 2 is at least okay. 1.7, 2 and all is danger. See, that's why I always tell, when you're listening to the classes, your objective is to absorb the content, not to finish the content. If you focus on finishing the content, you are finished. So don't finish. So focus on absorbing. And you're that, see, the why you feel face to face is very effective, because you're watching at standard speed. Obviously, that's the reason why you feel very effective, because no, whatever I want to communicate, you're not just listening, it'll absorb into your mind. So absorption is what important when you're listening. So that absorption you will get only when you watch at standard speed. Items of financials. Statutory auditor want to verify that all the borrowings on the balance sheet represents valid claims by the banks and other parties. Means all the borrowings. Completeness assertion. And suggest few audit procedure. Items of financials, tight question only. An important factor in determining form, content, extent of documentation of significant matter is the extent of professional judgment exercised in performance of the work and evaluating. Explain clearly examples of significant matter in documentation chapter, last question. Examples of significant matters. Completion and review. Earlier, no, RTPs used to have very different and complex questions. But now RTPs are very simple. MTPs are having different, because main exam they're testing difficult questions. Normal MTP and main exam. MTP, whatever standard we saw, right? The same standard will be the main exam also. It will not be more than that, because already that's heavy. CM Manoj is stat audit of the company. He has completed the audit and issued audit report dated June 30. Before signing the audit report, written representation dated 29th June were obtained from management of the company. Correct, no? Nearest, as near as practicable to the date of audit report. Discuss the significance of the date of representation. Also state whether representation obtained on 29 January is appropriate. Yes, it is appropriate. No problem. We'll see what answer they gave. Did they say not appropriate? Appropriate only they said. You see, from the above it can be concluded that written representations have been obtained appropriately. Written representation must be as near as practicable to date of audit report, but cannot be later than the date of audit report. Written representation provide necessary audit evidence, but it cannot provide sufficient appropriate evidence. You remembered better than me. Hey, honestly, no, I can't remember entire subject. But you give me 2 days time. And suppose if you are conducting exam after 2 days, like if you ask me honestly, do you remember entire subject? No, obviously not. But concepts I remember. Like exact answers and all I can't. Because I don't have exam, no. Why should I remember? You should remember, you have exams. If I have exam, I know. See, like that's what. Day before exam, you have 1.5 day time, right? You do intense revision. That's not like the revision which you do normally in 1-2 days. That day before exam, the revision intensity is altogether different. You will not use phone, yes or no? Generally now if I ask you to sit and revise, you will be using phone simultaneously. One reel here, one page here. One reel here, one page here. Yes or no? So it's not that intense. But day before exam, since it's like you will think of another 4 months, obviously. Oh my god, another 4 months will be wasted. So you have that fear. So definitely you ignore every other disturbance. I'm talking about those who are serious about exams, not about others. Okay, so if you're serious about exams, technically that 1.5 day, really you do intense revision. Such a kind of intense revision if I do, I also write entire points, everything without any forgetting, I will also write. But why, what is the necessity for me to do intense revision? Tell me. I don't have exam. No, my duty is what, to just explain you neatly every concept so that you will not have any doubt or vagueness when you're reading. That's my duty. One student asked me, sir, do you remember entire content? I said, no, obviously not. I can't remember, obviously. I just know, suppose right now, whatever I know, the moment I cross, I forget. I don't remember. Because that's not necessary. Like if at all you say, sir, being a faculty, you should remember. No, don't expect that. No faculty remembers. I'm honestly admitting it. 2 days. 2 days if at all you give me, then I can remember, and then after 2 days you can conduct a test on me. While conducting audit of BYN Limited, TAY notices that company has lost one of its key markets along with important customers. What is it? Very good, excellent. Operating indicator in going concern. Additionally, several highly successful competitors have emerged, impacting business of the company. Operating indicator. Despite the existence of material uncertainty, CAY finds the use of going concern basis is appropriate for preparation. The company has also disclosed the uncertainty the notes adequately. How should we deal within the matter? Operating indicators. These situations cast a significant doubt on the entity's ability to conduct a going concern, which resulted in material misstatement. Further, the entity has disclosed the material misstatement adequately in the financial statements. Therefore, auditor will express unqualified opinion and draw the attention of the user to that material uncertainty in the audit report under material uncertainty related to going concern section of the audit report. Correct? I recollected. I am getting really doubt. How come you are answering so clearly? All of you studied together, huh? Like how? Like in class projector lo they'll play video. Huh? Oh, appudiya. Amma it was. Audit report. Discuss reporting requirements in CARO 2020 regarding statutory dues and transactions with related party. Transactions with related party, whether they were conducted in accordance with 177 and 188. 2. Whether disclosures in the financial statements are as per applicable financial report. Nothing but accounting standard. The statutory, we have 2 points. Disputed, undisputed. Disputed statutory due, we just have to give information about where the dispute is pending, amount involved in the dispute. Undisputed, 2 points we need to check. One, whether the entity is regular in payment of undisputed statutory dues to respective authorities. 2, if not, what is the extent of arrears of outstanding statutory dues for a period more than 6 months as on balance sheet date? That's it. Over. Next. Section 77. Under what circumstances the power can be exercised by the central government, like about special audit. Cooperative societies, no, central government can exercise special audit in few circumstances. When society is carrying business that is endangering, endangering the interest of the public or something. Like there are some 3 criteria. Or when society is becoming insolvent. Like there are 3 circumstances when special audit will be carried out. I told I don't remember subject. Yes or no? 3 circumstances were there that I remember. Society's audit almost more than a year I thought. It's been more than a year that I thought. So in the past when I didn't look into the chapter again. So but I still have this some like bare remembrance, maybe 3 points will be there. Like that I remember. See, I told the 3 points I know. Financial statement of the society is endangering solvency. Hey, correct, I told solvency point. And serious injury or damage to interest of the trade. That also I told. Society is conducting business against prudent business practices, prudent commercial practices. In these 3 circumstances, special audit can be audited by central government. Special audit may be conducted by a separate auditor, or maybe the auditor of the society only can do special audit. Special society's audit I immediately discussed after audit report chapter. Because now in society's audit, many topics were resembling audit report topics. That's the reason I discussed immediately there. Next. Again, now I'm starting in the next month, October month, a fresh batch for CA intro audit. So probably after 7-8 months, I'm starting. After 8 months gap, I'm starting the next audit batch. In that previous recording also, I gave some 10 to 20 hours, approximately, not 10, 20, 15 hours approximately, my previous version, previous to previous version. That videos I gave actually. Now this time I am doing it completely from my color material, which I recently released. Now, like next time onwards, I told, right, I have only 3 books, color material and question bank and MCQ book. 3 books will be having. MCQ book also we are finalizing maybe in 2 days. I'll be releasing. Need not practice. You are very good at that. You need not. You just focus on reading again and again, revise again and again. That's enough. Audit of banks, compute drawing power of cash credit account of Tirpa Limited for the month of March. Will solve. Who will solve? Some of you solve and tell me. I will also solve. And I pray that my answer only should be right. Yeah, my answer is over. Hey, you should not see, okay? Be honest. Others. T4. By the way, you need to calculate what? Drawing power. How much? How much? How many of you got 65,000? No, 62,000. 62 you got. 59,000. 59,000. How many of you have got 59,000? How many of you have got 50,000? 48,000. I guess 48 is right. 48,000. Why 48,000? Because drawing power cannot exceed. Okay, ignoring the sanction limit, what is the drawing power? 59,000 is the correct answer. 59,000 is the correct answer. Ignoring the point given here, sanction limit, if I simply compute drawing power based on the data given, the drawing power will be 59. But drawing power cannot exceed. 99% students will write 59,000, which is also correct answer, but they will forget to write this point. They forget to link this point. This is the important observation here. I got 59 only, but when I'm seeing this answer again and again question, I got this. I found this observation. So the answer will be 48. So we'll see. I think, yeah, it's 59,000. How to compute? Tell me. 60,000 minus creditors 10,000 is equal to 50,000 multiplied by 30% margin, means 70% only they'll give. Yes or no? Debtors, how much? 55,000 minus 15,000 40 into 60% eligible. Correct? Correct? Restricted to. That's it. Look at the answer. I hope it's not wrong. No, they did wrongly. Here, how come 60? 40 minus 16 is equal to 24, right? 24 plus 35, how much it is? 59. They also did correctly. Clerical mistake. Yes or no? But the sanction limit given in the question is 48, whereas drawing power is 59. So drawing power would be restricted to sanction limit 48. They did correct only, just that number outer column they did wrong number. That's it. That's it. Next. Chapter number 11, finally. ABC and Associates, an audit firm, has been approached by prospective company client that has in business for about 10 years to conduct an audit of FS, financial statements. Before accepting the audit, the firm want to access the integrity. It's actually SS. The firm want to assess integrity of the, how can I access integrity? It's SS, okay? The firm want to assess the integrity of the prospective client. With regard to assessment of integrity, what matters? What is the business reputation of the client? Integrity of the client, how will you check? Business reputation of the client, credibility of the client. Only integrity of the client, how will you check? Yes or no? Business reputation of the client, integrity of the client, whether any money laundering activities are going on, whether the client is aggressively concerned about maintaining the fees as low as possible, whether the client is aggressively interpreting accounting standards or not. Yes or no? 4 points if right enough. Identity and business reputation of the clients, nature of operations including business practices, attitude of the client and aggressive interpretation of accounting standard. Is client aggressively concerned with maintaining the fee, or indication client might involve in money laundering? Yes or no? That's it. These points were there in our book as it is. And I told in the class, this can be asked as sub question for 3 or 4 marks question. You typically need not solve any question, because in the class itself I tell how many ways a question can come. Yes or no? That's it. The RTP is over. Confident? Yes. Thank you.